Good morning. Welcome to the annual cross-border conference hosted by Dundalk and Newry Chambers. My name is Mark Simpson and I'm delighted to be your host again this year. It's a pity, of course, that we can't meet in person, but we have around 300 people attending today's virtual event, plus 22 different people will be contributing in some way or another. So we do have an awful lot to look forward to. 2 years ago, of course, we were able to gather together at the Carrickdale. It was a great day, and it actually turned out to be the biggest indoor event held in Ireland before the sudden lockdown. The lockdown came, as we know, the COVID pandemic really started to hit home, but thankfully things now are very different. And that's one of the reasons why we're gathering today. We're going to look forward towards economic recovery. We know that businesses and many of you out there require some more advice and support and want a bit more information about the opportunities which are out there. Trust me, there are opportunities out there. The theme of this year's conference is sustaining and building cross-border cooperation and trade. We're going to be looking at local, national and international issues, whether that be the post-Brexit environment, the labour market or other issues of the day, including, of course, Ukraine. And we know that many of us have connections to that war-torn country. And I think it would be a good idea for us all, just for a moment, to reflect on the people that we know and the people that we don't know and the people that we are thinking about in Ukraine, just for a moment before we begin. Thank you. Before we start, a big shout out to our sponsors, Newry, Mourne and Down District Council, Louth County Council, InterTradeIreland, Louth Local Enterprise Office, and of course the M1 Corridor Project. Thank you to all of our sponsors. Events like this really wouldn't be possible without them. Okay, it wouldn't be a virtual conference without a bit of Zoom housekeeping. Everyone's camera and mic is off, but we do still want you to interact with us. There is a question and answer session at 10:45. Put any questions you have into the chat. You can see there's a chat function at the bottom of your screen, and we're all over social media. You would expect that, of course. Feel free to post something on your favorite social media platform, whether it be Twitter or whatever, using our special hashtag for the day, which is magically going to appear on the screen. There it is, as if by magic, hashtag Cross-Border Conference 2022. Finally, if your connection fails at any time, just go back to the original link that you were sent. Click on that again and it will work. Trust me, I'm a journalist. Right, let's get started. As I mentioned, the two local councils are important sponsors of this event. And I would now like to ask the last Cathaoirleach of Louth County Council, Councillor James Byrne, to begin our conference.
As last Cathaoirleach of Louth County Council, I would like to welcome you all here today to our post-Brexit conference for 2022. I want to acknowledge the presence of our Minister for Public Expenditure and Reform, Michael McGrath TD, Minister for Finance and Northern Assembly, Conor Murphy MLA, and Chair of Newry, Mourne and Down District Council, Councillor Cathy Mason. It's wonderful to see such a large crowd in attendance today. It highlights for me the genuine interest in and need for further guidance in cross-border trading as businesses navigate their way through a post-Brexit world. Today's event is a very important one, as all of us focus on the issues we face on both sides of the border together, rather than taking a more singular view from a northern or southern perspective. Today's event also speaks volumes of the collaboration that has long existed in this area, collaboration north and south, and collaboration between public and private. I am delighted that Louth County Council and its LEO are co-hosting this morning's event, one aspect of the local economic focus approach the Council has taken. Louth County Council has a long-standing memorandum of understanding with Newry, Mourne and Down District Council, and it's a privilege for me to participate as a member of the MOU and collaborate with our colleagues there on this and a range of other public services. The Louth, Newry, Mourne and Down region is highly dependent on Indigenous business, and the outcome of Brexit is more significantly felt here than anywhere else on the island of Ireland. It is critical that businesses take stock of the challenges of cross-border trading in a post-Brexit world and look to address them. We have a strong agenda today. We have a range of expert speakers, and I expect this will be of benefit to all attendees. Thank you all for taking the time out of your busy schedules to be here. It speaks volumes of how important trading in this cross-border region is to this community. I'll now hand you over to the Chair of Newry, Mourne and Dentistry Council, Councillor Cathy Mason.
Thank you, Councillor Byrne. As he mentioned, we are now going to go live, or no, pre-recorded to Councillor Cathy Mason, Chairperson of Newry, Mourne and Down District Council, to officially kick us off today. Over to Councillor Mason.
Díobh Carja agus Fáilte Row. Distinguished guests, Minister Conor Murphy, Minister Michael McGrath, fellow councillors, ladies and gentlemen. It gives me great pleasure to welcome you to this post-Brexit virtual conference. We can all see from the very packed programme the need to address the challenges we face in our region. However, our cross-border partnership approach and our strategic location provide vast opportunities for our businesses. We are so aware of the importance of the Newry-Dundalk region to an all-island economy. The positioning of Newry, Mourne and Down and County Louth on the Belfast-Dublin economic corridor and the close cooperation between our two councils ensures that we can build on our strategic alliances, which is key for supporting the growth and future strength of our economy. This cross-border conference, through a mixture of presentations, panel sessions and Q&As, will provide a timely update for businesses and stakeholders on the challenges, opportunities and support available for businesses in a post-Brexit economy. The large and diverse number of organisations and businesses attending here this morning just shows the enthusiasm and expertise that we have within our region. The recent experiences of businesses arising from COVID-19 pandemic and of course Brexit have culminated in the most challenging of times for all businesses, regardless of sector, size or status. Creating a period of uncertainty and pressure on our economy, the setbacks have been a turbulent experience for all of us. So as a council, we are committed to providing support to our Indigenous businesses and continue to work with key stakeholders to ensure the advancement of economic opportunities, particularly on a cross-border basis. So I'd like to conclude by thanking you all for your attendance here this morning and to all of the organisers and sponsors involved in this truly cross-border conference. I trust and hope you will have a productive event. Garamela Mayagav.
Thank you, Councillor Mason. As she mentioned, it is a cross-border conference and we're going to hear now from ministers on both sides of the border. We're going to hear from the Executive Finance Minister, Conor Murphy, in a moment, but I'm delighted to say we're now going live to government buildings in Dublin, and we're going to hear from the Minister for Public Expenditure and Reform, Michael McGrath TD. Minister, over to you.
Thank you very much, Mark, and good morning to you and everyone online. And I am genuinely delighted to be able to join you all this morning at what is a very important cross-border business conference, and I do want to thank both Councillor Byrne and Councillor Mason there for their welcome and their introductions, as well as of course the teams in Dundalk and Newry Chambers for all their hard work in organising today's conference. And from looking at the conference programme, I think we'll all agree there is a wonderful array of speakers lined up for this morning, including what I'm sure will be an insightful presentation from Oliver Mangan, Chief Economist at AIB. We are meeting today, of course, at what is undoubtedly a time of enormous challenge. The combined pressures of Brexit and the COVID pandemic over the last 2 years have had a huge impact on the economy as a whole and have created significant difficulties across many of the sectors of our economies on this island. But now we face an appalling political and humanitarian crisis in Ukraine, unprecedented since the end of the Cold War. The lifetime of this government will see Ireland mark 50 years of membership of the European Union. Our membership has played an immense role in Ireland's social, economic and indeed political development in the intervening 5 decades. And the values of the European Union are our values. We will give practical demonstration to these values in our response to the unfolding horrific situation that we are witnessing in Ukraine. None of us can truly know what will happen next, but I can state with certainty that the solidarity of the European family of nations with the people of Ukraine will guide our actions. Before turning to the topic of today's conference, I want to reaffirm the commitment of the Irish government to playing our role in providing the necessary humanitarian aid for the Ukrainian people and support for the Ukrainian state. And we are adopting a whole of government approach now to make sure that we respond generously and quickly to the needs that are coming before us every day. As I said at the outset, while Brexit and COVID have presented unique challenges, I would argue strongly that this is also a point of real opportunity north and south, opportunity for shared planning, shared endeavour and shared growth. And I am really pleased to be sharing this platform this morning with my colleague, Minister Conor Murphy, with whom I have a very good working relationship as we seek to maximise the economic benefits of cooperation north and south and of the all-island economy generally. Through the Shared Island Initiative, the government is bringing ambition, resourcing and a positive, inclusive approach to working with all communities and traditions on this island to build a shared future, underpinned, of course, by the Good Friday Agreement. Our objective is to work across the whole of government in all-island partnerships with the executive, with the UK government and with local authorities and civil society across the island. We can address shared strategic challenges, for instance, climate change, and take up economic opportunities more effectively in so many areas by working together north and south. And that's a key message that I want to convey in my address this morning. The government wants to see a fully functioning executive in place again as soon as possible, working for all the people of Northern Ireland and working with us to deliver beneficial north-south cooperation and investment, which is a key dimension of our shared island approach. Under the National Development Plan, which we launched last October, this government Shared Island Fund commits €500 million out to 2025, ring-fenced for capital investment in all island projects that will support a more connected, a more sustainable and a more prosperous island for all. Indeed, the revised National Development Plan sets out a total resource commitment to all island investment for the decade ahead of more than €3.5 billion, a very substantial commitment that will deliver real change on this island and create significant business and employment opportunities north and south. Last year, the government allocated €50 million from the Shared Island Fund to move ahead with long-standing and new cross-border projects. And just last week, our Taoiseach led the announcement of the first round of some €37 million in awards under our major new North-South research programme run by the Higher Education Authority. These awards support the government's shared island vision by bringing researchers from all corners of the island together to work on pioneering projects over the next 4 years, not only strengthening existing relationships, but also fostering new vital research partnerships on the island. We've also allocated shared island funding to move ahead with the landmark Ulster Canal Restoration Project and the Narrow Water Bridge. And as everyone here will know, the Narrow Water Bridge will provide a huge tourism and connectivity boost and serve as a linchpin for active travel and recreation activities in the East Border region, including the development of greenways, walking trails and park amenities. The government is fully committed to seeing the Narrow Water Bridge project completed. I was recently in County Louth on a personal visit for a sporting occasion, and I took the opportunity to visit where the Narrow Water Bridge will connect north and south, and I could really see it firsthand the immense potential it will open up once we get this project completed. And so I do want to commend Louth County Council and Newry, Mourne and Down District Council for their collaborative approach, their vision and indeed their commitment, working with stakeholders across the region and the two administrations to finally bring this landmark connection into close proximity now. The Narrow Water Bridge is precisely the kind of cooperative, mutually beneficial investment we want to do more of through the Shared Island Initiative. Ministers across our government are taking forward other new Shared Island investment projects this year, including projects to support climate action, enterprise development, electric vehicle charging networks, and local authority investment cooperation on a more strategic cross-border basis, all supported through the Shared Island Fund. We're also seeking to work with the Executive and the UK Government to establish new all-island research centres to conduct world-leading research and innovation by joining up complementary capacities in areas of shared priority for both jurisdictions, such as climate, cybersecurity, digital health, and precision medicine, to name just a few examples. The objective is to enhance the research and development base that is fundamental for high-value enterprise growth and investment throughout this island. The government is committed to making a major allocation from the Shared Island Fund to support this. We will also continue to support the vital work of InterTradeIreland, which has assisted over 42,000 businesses right across the island to explore cross-border markets, develop new products, processes and services, and to become investor ready, supporting 16,000 jobs north and south and generating more than €1.3 billion in business development value. Given its mandate to develop north-south trade, InterTradeIreland is particularly well placed to assist businesses to respond to the challenges associated with both Brexit and indeed COVID. ITI has brought forward important initiatives such as its Brexit Advisory Service, established in May 2017, to assist companies both north and south prepare and plan for the UK's withdrawal from the EU, and its Brexit Planning Voucher Scheme to help businesses obtain expert advice on specific areas such as tariffs, currency management, and regulatory and customs issues. And I know that Kerry, Curran and Deirdre Maguire from InterTradeIreland will be telling you much more about these schemes and the new technology-enabled cross-border trade information service over the course of today's conference. And I'd like to acknowledge the supports which ITI put in place to help SMEs facing challenges arising from COVID, Emerge, which provided consultancy support to companies to develop online and e-commerce solutions and emergency business solutions, which helped companies avail of professional advice to address challenges arising from the pandemic. Emerge will be replaced this year by ITI's new digital sales programme. The government wants to make strategic all-island infrastructure investments that will support a thriving island economy, as well as transition to a zero carbon future. Last year, as you know, Mark, we commenced the all-island strategic rail review jointly with the executive, and the conclusions later this year will inform how we invest together to enhance strategic rail connectivity between across the island. We also want to explore the significant potential of cross-border approaches on renewable energy. That's why the Department of Transport has commissioned research to examine the frameworks we need for green hydrogen on the island, looking to the development of integrated cross-border hydrogen transport routes. So these are just some of the investment and cooperation priorities that the Irish government is taking forward as part of the Shared Island Initiative. We want to work together to create a more connected, sustainable and prosperous island and a brighter future for all communities and all traditions on the island. Finally, I want to highlight the new Peace Plus cross-border EU programme, which will be launching in the coming months. This new EU programme will continue the excellent work of the Interreg and peace programmes right across the region in a single programme, aiming to build peace and prosperity on a cross-border basis. With total funding of over €1.1 billion, Peace Plus represents a major financial commitment for the border counties of Ireland and for Northern Ireland. The new programme will support a broad range of interventions, including SME development and transition, cross-border skills development, research and innovation, smart towns and villages. Peace Plus will also include a €165 million investment in the enterprise rail service, with the aim of moving towards an hourly rail service between Dublin and Belfast. This flagship investment will bring major economic and environmental benefits to this region. As sponsoring minister for the Peace Plus programme, along with my colleague, Minister Conor Murphy, I'm very much looking forward to seeing the programme mobilise later this year. So Mark, thank you all very much for your time, and I do hope you all enjoy and get the most out of what looks like a really excellent lineup over this conference for the remainder of the day. Thank you very much, Mark, and take care.
Thank you, Minister. We know you're very busy, so we really appreciate your time this morning. Good news there about cross-border rail travel. Speaking as someone who's going down to Dublin next week to see Ireland beat Scotland at the rugby. Minister, thank you, and hopefully we may see you in person next year at the Carrickdale. Thank you. Moving on, I don't know if we're going now to Newry or Armagh or to Belfast, but we're going to be joined by the Newry and Armagh MLA, Conor Murphy, better known, dare I say, as the Finance Minister. I remember a few years ago playing against you whenever the Stormont politicians played the Stormont reporters. Today we're on the same team. Conor Murphy, welcome, and it's over to you.
Thank you very much, Mark. I'm actually in Camlock. I have some business in South Armagh, so I have some business in Newry this afternoon, so I didn't travel to Belfast today. So it's great to be able to operate for at least a day down in my own patch. But thanks for inviting me once again, and good to hear Michael speaking there. We do a lot of business together, and unfortunately with pandemic it is nearly all virtual, so just like we're hoping to get this conference in person next year, I'll be looking forward to building on the working relationship we have in person when we eventually get to meet and continue on the business that we've been doing, which is of vital interest, I think, to your participants in this morning's conference. And I heard Michael outline a lot of the work that has been going on north and south, which is hugely important. And I probably will touch on some similar themes to set out some of what I see as the opportunities to further sustain and build on already well-established cross-border economic cooperation and trade across the island, not just at intergovernmental level, but also at local government level, because I was in Newry and Mourne Council before it became Newry and Mourne Down Council for a number of years, and there was a very close working relationship with ahead of perhaps even some of the EU developments, a very close working relationship always between the two councils and the business organisations, or even with the difficulties at that stage in terms of what the border threw up between us. But before I get into that, I'd just like to reflect on the last year, I suppose, since the 2021 conference. We'd all hoped, of course, that 12 months later we moved on from COVID and the impact that it's been having on society, on our health service and the economy. Unfortunately, that hasn't been the case. And even with the recent lifting of restrictions, I know that many are still feeling the impacts of the pandemic. As Finance Minister in the North, I've visited and spent a long time over the course of last year and into this year, and today actually visiting businesses affected by the pandemic from all sectors, including those here in Newry, Mourne and Down. And the common message coming from these had been that the rates holiday that we managed to provide was a vital lifeline for them. Since the onset of the pandemic, my department's provided about £565 million of rate relief, including the announcement we had earlier this month of a further £50 million of rates support package to support the recovery. And that will provide all businesses in the next financial year, in the first couple of months, with the exception of larger food stores and utilities, with a 1 month rates holiday, and a further 2 months then for the hardest hit sectors, who will receive 3 months rates holiday in total. So that means businesses in the hardest hit sectors since the pandemic have paid no business rates since March 2020, and that will now continue to July 2022. And on top of that, we have also been able to provide almost £500 million in terms of COVID support grants to business. Included in that was over £117 million of grants and rate reliefs to businesses in the Newry and Mourne district, Newry, Mourne and Down District Council area, including the most recent one, which was the Omicron Hospitality Grant, which recognised that a lot of our businesses which had opened up and were expecting a very good return at Christmas had to quickly readjust to the Omicron variant, and so we provided some level of support for them, and also recognizing that the cost of living is becoming an increasing factor in all our lives, and I mean it's something that, as well as the tragic and reprehensible events in Ukraine, is continuing to impact on our television screens and our daily lives. The cost of living, particularly the cost of fuel increases. So we are extending small business rate relief scheme for the next year that supports about 29,000 businesses. And we are delivering a £19 million support package to smallest business properties to try and assist them on the recovery path out of the pandemic. So the recent removing of restrictions, I think, does provide optimism and a degree of hope for businesses, albeit with the worrying impacts of the cost of living crisis and the trouble and conflict going on in Eastern Europe. But it's very vital, I think, as Michael outlined, that we continue to work on the north-south axis with our partners, both at governmental, local government level and business level, to ensure that the economic potential of our island is fully unlocked and exploited. And cross-border cooperation is vitally important in this regard. The trade, of course, is one of the key economic drivers for the all-island economy, and cooperation and collaboration between the executive and the Irish government is and will be fundamental and instrumental in maximising the opportunities for this in the time ahead. The economies of North and South are closely intertwined, particularly along the border, and the highly integrated supply chains right across the island. And recent trade statistics released by the government in Dublin certainly shows the strengthening of the cross-border trading relationship. Imports from the south into the north doubled in 2021 to 3.7 billion euros compared to the previous year, and the exports north to south increased by 65% to almost 4 billion euros. So for many small traders, as they trade openly across the whole island, that cross-border trade is an important stepping stone into broader activities, export activities for businesses into Europe and further afield. And Brexit, of course, has had implications for our businesses, creating challenges in doing businesses, with InterTrade's latest all-island business monitoring reporting that Brexit was an issue for almost half of the businesses surveyed on the island. And support in this regard, therefore, is important to help businesses to overcome these issues, where the Economy Department has the lead responsibility for this in the North, along with its agencies. InterTradeIreland, who we will be hearing from shortly, are instrumental in helping small businesses on the island and exploring and exploiting new cross-border markets. But they've also set up a dedicated Brexit advisory service to help businesses overcome issues and to take up new opportunities. So much of the discussion negatively has focused on the Irish Sea border issue. It's clear that there are opportunities as well in relation to the protocol. For example, one of our own local companies, Norberg, here in Newry, highlighting that the protocol so far has been very effective for them as a result of that dual market access. And I believe people in this area in particular, but people, I suppose, across the island, but particularly in this area, were very much aware that the advent of the customs union and the single market had begun to undo the damage of that partition, particularly to our shared hinterland between Newry and Dundalk, and that businesses and administrations and human connections even had been repaired by that reduction in the kind of physical side of the border. And that's why the people of the North, I think, voted very clearly against Brexit, because we recognised that the damage that it would do in terms of that improved development of all Ireland cooperation and a reduction in terms of the border. So in many ways, with all of the noise around the protocol was a compromise because we didn't want to leave the European Union. We voted against leaving the European Union, and the protocol was a measure to try and undo some of the damage that undoubtedly was going to create for us. So while there have been issues in relation to it and the implementation of it, certainly I think those issues will be resolved between the EU negotiators and the British government negotiators. And so the idea of disrupting our executive in relation to that matter, particularly when it's having no impact, and clearly you can see that those negotiations are moving on, perhaps more impacted by events in Ukraine than they are certainly by events in Belfast, and that the only I suppose impact that stopping our executive function in this time, with all of the challenges we face in the North and across the island, is really to damage the people that we collectively represent. So I would hope to see people back around the executive table sooner rather than later, taking the very necessary decisions that we need to take in the time ahead, because cross-border economic cooperation is vital if we're going to exploit the opportunities and fully realise the potential of the all-island economy. So it's a lot of important work we need to take forward in conjunction with the Irish government, and much of this is coordinated through the North-South Ministerial Council, which people will be aware has been interrupted in terms of its meetings and its schedule since last autumn, and that has not been helpful in terms of the work that is very vital to all of the businesses who live in the border area in particular, but right across the island. So as Michael, I think, had outlined in his contribution, we have continued to work closely and particularly collaboratively and proactively on the Peace 4 and Interreg programmes ensuring that those are concluded successfully. And Michael did mention a number of projects in relation to those that apply to this area. I won't rehash that, but needless to say, they are very important, particularly the narrow water bridge, which will now be looked at under the Shared Island Fund, but also the Newry City to Carlingford and Omeath Village, the Greenway, which I've walked myself on occasions and is an absolutely fantastic addition to our border area, and I think will be expanded on in the time ahead. And there have been £9 million to local authorities to improve relationships between people on both sides of the border as well. So we're continuing that work, and also, as Michael did outline too, we're developing the Peace Plus programme, which is close to £1 billion sterling, over €1 billion over 7 years, and that has been agreed, thankfully, by the executive, by the government in Dublin, and also at the North-South Ministerial Council. We managed to get that agreed in the autumn, and that will be submitted and up and running fairly quickly, we would hope. And of course, there are many themes in that which will be of interest to people in the Newry and Dundalk areas, and that includes intervention and support for developing skills, social engagement, peace building activities, smart towns and villages, and environmental projects. And it will also focus on maintaining and building on existing cross-border partnerships. And some of those in this particular area have been very strong. And that's why we have events such as the conference today. Areas which have been particularly, and sectors which have been particularly impacted on by Brexit, I think will have an interest. And I'm sure both chambers and both councils will continue to work together to collaboratively to try and access the new programme that's been developed in terms of Peace Plus. I also welcome the commitment in the government in the South, their National Development Plan for the Shared Island Fund for projects up to 2030, and the proposed partnership approaches with the Executive and the British Government to provide a strong basis for delivery of strategic investment priorities for a shared island up to 2030. And I think that's important work, which will complement, I think, the level of support that we managed to provide in Peace Plus as well. Another initiative, I suppose, which will have an impact, certainly on the northern side of the border, but I believe on a cross-border basis as well, are the city and growth deals, which have been a good opportunity for cross-border cooperation. The Belfast Region City deal, of course, includes Newry, Mourne and Down, and has strong linkages to the Irish government's Project Ireland 2040 programme. So I'm very delighted, obviously, to see the investment in the City Deal project, but particularly my own local patch here in Newry, Mourne and Down District Council. And we have, I think, between the Executive's funding through the City Deal and the complementary fund, plus the Council's own contribution, the total investment for this part of the region is some £200 million, which is a very significant amount of investment for the area. And that enables projects such as the Newry City Centre Regeneration Project, the Southern Relief Road, which will have an important not only in easing traffic congestion in Newry, but also providing a very important linkage between Warrenpoint Port, which is a strategically important port for the island of Ireland on the east coast, and the north-south motorway connection. And also, of course, the City Park in Newry, which is something that's long sought after by the people of Newry. So last year, when we addressed this event, we did mention the report in terms of the Dublin-Belfast Economic Corridor, done by 8 councils from north and south, and that provides tremendous opportunities for cross-border economic development. It's important, though, that the corridor drives balanced economic growth across the island, because obviously this Dublin to Belfast has the potential to be the powerhouse, if you like, the economic powerhouse for the island as a whole. But it is important that we ensure that there is a balanced growth, and that potential in that is highlighted in a project that I think that Michael had talked about as well, and that All-Ireland rail network, not just Belfast, Dublin, but the potential to include Derry, Cork and indeed Limerick, and work is ongoing in terms of the review into that, and I would hope that that will report soon and give us a template for the way forward. So as you can see, Mark, quite a lot going on and continuing to go on despite the pandemic, despite the challenges of the protocol, despite the challenges within the executive and the North-South Ministerial Council functioning. A lot has been going on. There is enormous potential for positive growth on this part of the island, and both councils and both chambers are very well placed and have been very well placed, and very strong advocates of ensuring that those linkages maximise the benefit to the people who live in the area, the businesses who operate in the area. So I'm very much looking forward to closer collaboration, and I think that's going to be the key. I am very much looking forward to that, assistance in developing a regionally balanced economy right across the island, and ensuring that we build and continue to build on the north-south trade links and the opportunities which undoubtedly exist, even with the challenges of Brexit. The positioning of ourselves as a link between the British markets and the European markets will provide opportunities in the immediate term, and I would certainly hope that we will have be able to integrate ourselves more back into the European sphere in the time ahead. But that's a bigger question for another day, as you would understand, Mark. But I just wish the conference well. I'm very much looking forward to the time when we can get into a room together and start to discuss these issues out. But I congratulate the organisers again and continue that positivity, because with all of the challenges we face, both on this island and internationally, there still is enormous potential here, and there still are people of goodwill, and there's still a significant investment going on to try and assist that potential, and we should all take advantage of that. Thanks, Mark.
Finance Minister Conor Murphy, live from South Armagh. Thank you very much indeed. We've heard now from 4 people in power. What about the people at the sharp end? What about businesses? Well, we're going to hear a business perspective now from Eamon McKey, who's the Chief Operating Officer at DELI Lights Ireland. He's going to tell us about the actions DELI Lights took in response to Brexit, the big question, whether they worked or not, and the plans the company has for the future. Eamon, good morning to you. Over to you.
Good morning. Sorry, I was having some technical difficulties there. Can you hear me?
We can.
Oh, thank you, Mark. And thanks to the organisers for inviting me to speak this morning. I'm trying to share a screen now with my presentation. Can you see that, Mark?
Yes, we can. Thank you.
Perfect. Good morning, ladies and gentlemen. My name is Eamon McKey, and I'm the Chief Operating Officer in DELI Lights Ireland Limited. I'm here today to talk to you about our business's journey over the last few years, with particular emphasis on Brexit. It's not always possible to isolate the impact of Brexit, as there are a lot of moving parts in the economy right now. The next slide is just a brief history of the DELI Lights business. Key points are that the business is 28 years old, initially started as DELI Lights Cafes. In 1998, the manufacturing and wholesaling business was formed. Our export business commenced trading in 2017. We opened our customer experience food hub in 2018. We formed an ROI subsidiary in 2019, which more I'll talk about later. We are in the process of launching our own Planet Cafe branded hot eat products, principally for export markets. The next slide is a snapshot where DELI Lights is today. I just highlight a few key statistics. We employ 270 people, so we are a significant employer in the Mourne Point area. Our turnover is over 20 million and is growing strongly. We are supplying the GB market, and we're also supplying another 9 European markets. We see our export offering as being a key driver for the growth of our business. And sustainability is a key pillar of our business. We seek to balance people and the planet with a profit objective. So how did we approach Brexit? Approximately 70% of our fresh island of Ireland products cross the Irish land border. So we knew that Brexit was potentially very significant for DELI Lights. So first we decided to seek out some data. Fortunately, InterTradeIreland and InvestNI both offered vouchers and grants to help assist in planning for Brexit, and this assistance was invaluable. We commissioned a study on the likely cost of tariffs to DELI Light of a hard Irish border. The estimated cost was over £1 million, and therefore Brexit immediately became an existential threat to DELI Lights. DELI Lights products are composite products, and while there tend to be agreed tariff rates for commodities, say ham, cheese, grain. When these are combined into a sandwich, further work is required. So we also did a lot of work with the ROI customs authorities on how we would approach this issue. We formed an ROI subsidiary in 2019. It has fulfilled a number of functions. Initially, we planned to use it as a vehicle to import product into ROI so that our ROI customers could purchase our products without any import red tape. The ROI subsidiary then briefly became our intended ROI manufacturer, and it now serves as an EU exporter to some customers who, despite the protocol, refuse to contract with a UK registered company. In 2019, due to the cliff-edge nature of Brexit negotiations, and to meet some of our large ROI customers' expectations, we spent a six-figure sum setting up the option to manufacture in ROI. This money has largely been lost, and as far as I'm concerned, this was wholly a Brexit cost. We did a lot of work in 2019 on expanding our supply chain. At that point, the main purpose was to facilitate production on both sides of the Irish border. The protocol has meant the loss of some of our GB supply chain, so this work has not been wasted and has created opportunities for Island of Ireland suppliers with our business. So where are we now? The protocol has helped us displace some GB suppliers who were shipping sandwich products into Ireland. We have always made the argument that rough seas risk empty shelves, but Brexit and the protocol have helped us to get some of these opportunities over the line with new customers. We are actively marketing our location in Northern Ireland as giving us unique access to the EU and GB markets, and we've had some success with this. We do have customers who value us as a one-stop shop for their European food requirements, and this is a unique selling point for Northern Ireland businesses as a result of the protocol. Like many businesses, we have experienced staff shortages in the last year. The ending of free movement may have been a contributory factor to this, but it appears that staff shortages is not only a UK phenomenon, and worldwide people are re-examining their relationship with work, and I hear reference to the Great Resignation. Therefore, for now, I think it would be a lazy analysis to blame all staff shortages on Brexit. We're also battling inflation, and with the war in Ukraine, the risks here seem to be increasing. COVID has had a huge impact on our industry, with restrictions at times closing some of our customers. We have managed to win new business, and this, along with government support, has helped to safeguard many jobs. The recent invasion of Ukraine has been a real tragedy for the people of Ukraine, and is deeply upsetting to all of us. The attention has rightly been on the unfolding humanitarian crisis, and we in DELI have been trying to do our bit, and we wish the Ukrainian people well. But in terms of the Northern Ireland Protocol, it seems to us that the EU and the UK should, in the context of a war in Ukraine, be seeking to settle their relatively minor differences in respect of the protocol. Equally, we would hope that the protocol issues are not left to fester as other events now have to take more priority. Just some detail on Ukraine. Ukraine and Russia produce 27% of the world's grain. Ukraine is a major player in the European chicken industry, and we're all aware of what is happening to energy prices. So we in DELI are watching all of these issues closely. So what does the future hold? DELI takes a positive approach to the future, but we are realistic about headwinds and have learned to live with ongoing uncertainty in terms of some of the issues I've already highlighted. Our approach to counter these risks is to continue to grow our business internationally and in Ireland, and we continue to have ambitious growth plans. We have already secured business in 9 countries with leading providers of food to go. Our new brand, Cathy, will allow us to bring our ideas to a world market. We will continue to sell the advantages of the protocol. The UK has yet to start implementing checking or requirement for certification of EU goods. But I understand this is now due to commence later this year, and I think there are opportunities for Northern Ireland companies and perhaps ROI companies to utilise Northern Ireland for easy access to the GB market. Sterling fell dramatically after the Brexit vote. I know this was very difficult and in some cases terminal for some ROI businesses that were heavily exposed to the GB market. Sterling has been strengthening, and this is an opportunity for ROI suppliers to sell more to DELI lights and to other Northern Ireland companies and into the GB market. As I said earlier, it is not correct at this time to say staff shortages in NI and GB are purely related to Brexit, but we are monitoring developments, and it may be that the case that freedom of movement may make it easier to expand in ROI, in which case I can see opportunities for DELI lights to manufacture in ROI and for businesses in ROI to grow on foot of servicing the NI and GB markets. Thank you for listening, and thanks again to the organisers for inviting me to speak today.
Eamon, very interesting. Thanks very much indeed. If you can stop sharing your slides, that would be great, but the slides were very, very useful. So thank you. We have heard from politicians, we've heard from the sharp end of business. We're now going to get some advice because we're going to go into a section which is called Trading North-South, Challenges and Opportunities for Business. We know there are opportunities out there, and we're going to talk to people who know all about them. We're going to be joined by Kerry Curran, who's the Assistant Director of Strategy and Policy at InterTradeIreland. As we know, they're one of our sponsors today, and we really appreciate it. At the end of Kerry's presentation, she will hand over to Deirdre Maguire, a good friend of the conference. She's the Brexit Advisory Service Manager at InterTrade. She's going to give us an update on the services, the advice and the support that is available. But Kerry, you get to go first. Over to you.
Hi, Mark, and hello, everyone. It's an absolute pleasure to be with you all today. Can you all see my screen okay?
We can't see you, but we can see your screen. We'll maybe see you later, Kerry. Thank you.
That's grand. Yeah, so just to say, it's very timely to be here with you today to talk about issues of cross-border trade. And really where we are now in 2022 at the end of our first year of post-Brexit trading conditions, and also to look a little bit to the future. What does the rest of the decade hold for us in terms of cross-border trade? And so let's dive into where we are now. So it's hard to look at the trade that we've experienced in 2021 without placing it in context. As you can see in this trend graph of cross-border trade value on screen, that really we've seen a substantial uptick in cross-border trade value from 2016. What we see is over the past 2 decades has been an average cross-border trade growth of in and around 4% per annum, and that's substantially grown since the referendum. And as we look to 2020, which has seen cross-border trade value of in and around 7.7 billion euros, we see that growing in terms of goods and services value to approximately 9.7 billion sterling or 10.8 billion euro by the end of 2021. So a really significant change. In terms of the goods value, we've heard a little bit about that today already, and these are the main figures that we have available to us, looking at goods trade from the Central Statistics Office data. And it shows that imports from Northern Ireland, so north to south trade, was up a full 65% in 2021 over the previous year. And exports south to north were up 54% over that same period. So substantial changes in the cross-border market in this first year post-Brexit. But what's happening at a sectoral level? Let's have a little look at that. And what you're seeing here is north to south trade at a sectoral level. And you can see substantial growth here, with a real outlier there in terms of chemicals products, with a 204% growth over the year. And it's important to note, I think, when we look at these huge values and shifts in change, that it isn't all Brexit related, it isn't all supply chain adjustment in relation to the new trading conditions. And I'd like to pull out just one or two elements of the detail in there for you. So in relation to that outlier of chemicals, 90% of that trade is pharma trade, and we suspect a large proportion of that is vaccine and COVID related products being traded during 2021, which is a very particular feature of 2021. We anticipate this not being as substantial in the years ahead, although pharma itself has huge potential for growth. And looking at mineral fuels, which has grown by 114% in 2021, it's worth noting that 80% of that growth is growth in electrical current. And as we've all seen, those energy prices go up, this isn't about more electrical current, it's about a higher value of electrical current. And then manufactured goods, this is seen great growth, fourth from the top there, it's seen a growth of 33%, which is wonderful, really strong growth, but it's dominated by just 3 products: iron, steel, and non-metallic minerals, all of which have had price impacts in relation to supply and demand pressures. So it's not as clean as Brexit has adjusted everyone to trade cross-border. There's an awful lot going on. It's been a very complex year for trade in 2021. And let's look at that just quickly from the opposite direction. So Irish export trade with Northern Ireland during the course of the year, we see perhaps a more even spread. We don't have that huge outlier of chemicals, although its growth at 75% over the previous year is similarly dominated by growth in pharma and potentially that vaccine and test kit related trade. We see at the bottom of this graph, food and live animal growth of 47%, which is a really strong growth for the sector. And it's actually an area where we see huge potential for growth in the future. It's a really important area for both economies on the island. But I would note that in the meat sector in particular, that labour shortages, rising energy costs and logistical administrative burdens have really pushed up some prices within that sector. And of course, it's worth noting too, machinery and equipment, which has seen more than 100% increase over 2020, that as part of that growth, there was a substantial growth in new vehicle sales. And if we reflect on what we recall from 2020, it saw a very unusual year for new vehicle sales. It was one of the lowest years on record. So 2021 has seen an uptick in that trade in particular, but also the spending of pent-up demand in that space. So we're starting from an unusually low base when making that comparison. And so in all of that regard, I would say that there's certainly a huge amount of growth in cross-border trade, but also some very particular factors for 2021 that have impacted on the value of that trade at a sectoral level. And what does that look like in terms of the market and how shifts have taken place? As you'll see on this diagram, Northern Ireland is percentage-wise certainly the net beneficiary of the changing trading relations, with that 65% growth, with Ireland to Northern Ireland trade equally impressive. Unfortunately, we don't have the internal market data to be able to show the Northern Ireland to GB trade, which I know many people are concerned about. But what I would note is that the GB to Ireland trade that we see here dropping at 13% over the course of the year. When we look at the Q1, Q2, Q3, Q4 figures for that trade, we see businesses adapting and adjusting to cross-border GB to Ireland trade activity, and as businesses have got established themselves in these new trading relationships, it's got easier, and trade has eased up, and hopefully that will continue well into the rest of the course of this year and beyond. And so in summary, I'd say when we think about 2021 and the really strong trading conditions that we've had in terms of trade value, a lot of this is de-risking of supply chains that's been happening since 2016, and it will be Brexit and COVID-19 related. We see logistical moves and changes in warehousing, which has changed the patterns of trade and how certainly larger firms are moving their goods across these islands. But we're also seeing rising cost of energy, shortage of supply, demand side pressures, and skills shortages, all of which are pushing up those inflationary pressures, and we're experiencing those rising costs at a firm and individual level too. Well, what about the future? What does it hold? As the cross-border trade and business development body, we've been undertaking a substantial amount of research with the Economic and Social Research Institute in Dublin, really trying to get under the hood of this question. And we've considered the macroeconomic changes that are taking place, the opportunities for growth on the island of Ireland in relation to the skill sets that we have, the sectors where we have strength, the educational attainment that we have, and other factors. And what we've established is that if we look out to the rest of the decade, we anticipate that by 2030, we will be reaching a cross-border trade value in the region of 14 billion euros, which is a substantial uplift on where we are today, but really continues that growth trend that we've seen emerging since 2016. So where are the opportunities within this? They're high value areas. How do we help firms at a sectoral level to take up this potential for growth? And if we look at the information that we have, looking out to 2030 from Ireland to Northern Ireland, so our south to north trade, you can see great potential across all of the sectors on the island, with some areas really jumping out in terms of machinery, chemicals, and our agricultural sector too. And then in the opposite direction, so our north to south trade, again, we see that chemicals area, which is in itself a very broad sector, having great potential for growth, as do all of the other sectors. And at InterTradeIreland, our role is to make sure that businesses across the island of Ireland have the opportunity to take up these opportunities to reach that potential for growth by 2030. But are they ready? We've, as you all will know on this call, have had a very difficult period of time. We've had a number of years where businesses have had a lot of uncertainty in relation to Brexit. We've had several years now of a global pandemic, which has had a real impact on firms' business models, their profitability, how they operate, and their sustainability. But we've been pleased on our latest all-island business monitor, when we've asked businesses about their current position, that 85% of firms were able to tell us that they were either stable or growing. And that's really right back to where we were pre-pandemic. So now in the early part of 2022, we are starting from a strong position. You know, businesses are opening up again. They are stable and growing, and in a good position to take on those opportunities for growth and to begin to reinvest in that future. And in terms of cross-border trade, and when we speak to cross-border traders about how they fare, they continually tell us that they're more likely to be growing, profitable, and have increased sales over their counterparts who don't have cross-border sales. And so again, at InterTradeIreland, we'll be supporting businesses to take that first step across the border in terms of their sales activity, in order to help them to reach that potential for growth. But we recognise that all of this isn't without challenges. We have COVID-19 still causing disruption. Businesses are still getting used to the market access changes that are taking place as a result of the new trading arrangements. As Eamon mentioned, the war in Ukraine has had a substantial impact on rising energy costs and created geopolitical instability. And of course, we still have continued uncertainty in relation to the protocol and future divergence in terms of GB regulatory environment. But there's also a lot of opportunities. We do know that figures show us that exporters on the island are benefiting from the unique status, particularly in Northern Ireland. There's lots of opportunities for us to continue to cooperate in areas of high growth potential. We have a supportive funding environment in terms of continued access to Peace Plus funding, Horizon Europe funding, important projects of common European interest, and of course, many opportunities for export-led growth. And at InterTradeIreland, we'll be working hard right out to 2030 to make sure that firms across the island have the opportunity to access and, importantly, to benefit from the growth potential that we can certainly see. So thank you very much for listening to me today, and I hope that's been of use.
Thanks, Kerry. And I think Deirdre is there to take this a step further. Good morning to you, Deirdre. Welcome back to the conference. You've been a regular over the years.
Good morning, Mark, and thank you so much for the lovely welcome. And I'm delighted to be here today. And thank you so much to both of the Chambers of Commerce, to the ministers and all the speakers before me as well. You'll be glad to know I don't have a lot of time, and I do have some slides, so I'm not going to take you through every single one. But what my job here today is just to let you know a little bit about InterTradeIreland's cross-border supports. And then I'm also going to share a little bit of knowledge about my tips and things that I see from the Brexit Advisory Service. So I'll very quickly move through the slides. So first of all, InterTradeIreland, we've been operating now for over 2 decades, and our goal really is to help cross-border businesses develop new products, processes and services and become investor ready. Okay, the programs we offer are we grow sales, we win tenders, we focus a lot on innovation culture, we help businesses raise funding, business insights, you've heard a lot of information from Kerry, and then the Brexit Advisory Service. So growing sales, that's the next slide. We literally have, we've a number of programs, and that will help the businesses move from very micro stage to thinking, should I start to look across the border, to developing a plan, to having a look at the markets, to actually getting a salesperson into your business. And we have funding and different types of stepping stones of funding available to get through all of those steps. Again, at the end of this month, we will have another sales, digital sales program, which we'll be launching as well. So watch the space for that, and we'll keep you updated on that. So then again, the next area that we support is tendering. If you are looking, so anybody who's in the tender market will know that documentation it's difficult if you don't know how to do it, and there is an art in completing tenders, and we offer lots of support to businesses in that area, from practical workshops to mentoring to huge meet the buyer events. In fact, we have a meet the buyer event on supplies and services, and that's on the 22nd and the 23rd of March. If you're interested in that, that link will be provided after the session as well. So following that, then we also offer, you'll see this is a very busy slide, I'm not going to read it all, but we offer so much support in helping your business innovate. There's a lot of funding opportunities there for your business, a very, very wide and broad, far-reaching impact. So we can help you work with an academic, we can help you work with a graduate. You've got a really good idea that will boost innovation in your business. And then also, if you've got something that is a real game changer for the industry, more money available in that, and also lots and lots of support. We can access still Horizon Europe. We've got an all-island innovation program, which is lots of masterclasses, seminars, online events. And we also focus on things like clustering, which is getting lots of innovative networks together so they can talk and learn from each other and build a cross-border trade in that area. And we've worked with the US research and development program, and we also have co-innovate project funding as well. So lots of innovation, and it would take me a lot of time to go through every single one of these. fees, but just know that we have lots to offer you if you have an idea, and innovation can be many, many, many things. Sometimes you innovate and you don't even know you're innovating. So lots of the cross-border supports in that. And following that, then we also have, if you're the entrepreneur and you want to know how to raise finance for your ideas, huge amount of support in this space as well. It helps you look to see how you will attract investors into your business, get venture finance. We even have a really very high profile competition called Seed Corn. There are £300,000 worth of euros available, split over different prizes, to help early stage and new start companies who are looking to come investor ready. So that's a really good goal if you have a really good idea and you want to grow and seek different types of funding. If you are interested in that space, I would encourage you all to have a look at our Venture Capital Conference. That is due to launch on the 14th and 15th of March. It's online, even if you get in for a section of it. I myself was at it last year, and you'll find there'll be some really inspirational speakers. You might get ideas, and it'll just give you a little bit of knowledge about alternative sources of finance for your business and how to raise capital. So following that, then we're into the Brexit post-trade. So that's kind of what I've been working on. And, you know, I presented here a couple of years in a row, and we've had COVID, we've had Brexit, and now we have more economic impact with what's happening in the market and the supply chains for Ukraine. So what I'm going to do is share a little bit of knowledge on post-Brexit trade tips. What I've seen is businesses have adapted, and they really have. They've worked really hard to get used to customs and trade with GB, analyse their supply chains, upskill people in their businesses. And it's, for some, a painful process. For others, it's just been a time constraint and also costly as well. But a lot of businesses are nearly there, and you'll have heard Eamon speak about the tariff review and looking at commodity codes. So businesses have done a lot of that work, and it's really proved beneficial because it can help you look for opportunities when you're ahead of that space. For businesses who are coming at it for the first time, and these are the conversations that I have quite a lot, businesses are in shock. So they're purchasing products from GB and realizing, oh my goodness, what do you mean I have to do all that work for customs? Oh my God, what is that? So that's a lot of what's happening for businesses approaching it for the first time, but there is support, and I'll come to that. Key tips: supplier engagement, keep talking to your suppliers, make sure you check your routes to market, you choose the right customs procedures. Is it transit? You know, are there any customs advantageous things that you can do, like customs warehousing, inward processing, outward processing? Please ensure, if you're going to use preferential tariffs, that you've got all the paperwork you need to make sure that your rules of origin are correct. And that's all about supplier engagement. Your Incoterms, which is your terms of trade, who will deliver the goods, who's going to pay for the carriage and delivery, who's going to pay for the duty, who is the exporter and importer of record. And I know Martin is speaking later on in the conference, and I'm sure that Martin will touch on those things as well. And then I just wanted to mention commodity codes. So lots of businesses have done the work on that. They've done the research, they've got their codes, but just be aware it doesn't end there. Commodity codes are a working live thing. They change over time, they can be updated. So you need to go in and just check your codes periodically is what I would say on that one. The UK this year changed some of their codes and refined them a little bit. So just, it's a regular ongoing task, customs and data checks. We're in a period of grace period for anybody in the agri-food sector. There are grace periods as far as export health certificates are concerned. So watch this space, because if that changes, there's a lot of work to do for anybody in export in the agri-food who will have to do export health certificates. Again, we can help you with support in that area. Marking, CE marking, your labelling, those changes are ahead in January 2023. Again, watch the space. It's like your planning, it's like your customs. Know these things are going to happen and plan and be ready. And finally then, audits and detail. This is all about your attention to detail. HMRC and Revenue are going to be auditing your work. They're going to be auditing your customs. This is the next thing for businesses to be aware of. We will help you, but please understand that this is a very important task for your business. And also then, finally, the supports and the webinars. Keep talking, keep joining us, keep keep coming, and we'll do our best to keep you informed. So look, very quickly then, I'm running out of time. Brexit Advisory Service, you've got a £2,000 voucher, 2,250 will get you access to consultancy support in all of the areas I mentioned. If you've used the voucher in the past, please come back in. We'll look at it again. If it's an old voucher or historic support, we're open to looking at it again. And finally, then we have a website, which is the next digital content that we have. Next slide. And that is Brexit 2020, InterTradeIreland.com, cross-border trade, lots of support, guides for Incoterms, commodity codes, rules of origin. You can share it with the people in your workforce. It's free, it's easy to understand and easy to access. These links will all be shared with you. So that's me, very quick tour. Thank you so much for listening. And you know where I am, Brexit at InterTradeIreland.com as well, and InterTrade Ireland's website. And please do reach out to us because we want to help and we want you to find those opportunities. Thank you.
Deirdre, brilliant as ever. Nobody does it better. One of our panelists is going to be Thomas McEvoy, but we are going to have the pleasure of hearing from him first. He's the head of enterprise at Louth Local Enterprise Office. Big supporters of this conference. As we know, it is very important that local businesses fully understand the support that's out there. Thomas, I'm glad to say, is going to focus on that, and there will be an opportunity, I'm told, after the conference for businesses who are interested to request information from Thomas and his team. But in the meantime, Thomas, good morning.
Good morning, Mark, and good morning, everybody. Great. And as I mentioned, I'm just going to briefly mention some of the cross-border activities and then focus in on the support. So I'm going to just be a little bit quicker than normal. And if we fly on to the next slide, please. And to mention that where policy goes, so does funding. And with funding comes opportunities. And the key to this is that Project Ireland 2040 is Ireland's blueprint. It's our plan over the next 20 years. And when the first draft of this came out, Dundalk, Drogheda and Newry did not feature on it. But with a lot of work behind the scenes with the Chamber and with the Council, we've managed to get that access put into the plan. And what that means basically is that there's going to be a national focus on this region, traveling north-south between Dublin and Belfast and with us at the centre. And as I say, that brings funding and that brings opportunities. And that's why we're here this morning. That has translated itself into a spatial and economic strategy. And in turn, that has brought its way down to enterprise supports that we roll out locally. So that's all welcome news because it means that we've got funding to help businesses. So if I move on to the next slide, please. There are a number of cross-border initiatives happening which have been ongoing, and that has helped make the case for the funding that we currently secure. So at the outset, we would have heard the two council chairs talk about the cooperation between Newry and Mourne and Louth County Council, and that's, as I say, that memorandum ensures that services are shared and there's a good understanding between. We also have InterTradeIreland. Deirdre and Kerry spoke about their services. But in the background, there is the Dublin-Belfast Economic Corridor, and this is where the 8 local authorities are working together to try and enhance the cooperation between what's happening in the north and what's happening in the south, and how can we work together better for the economic betterment of all. There's also a very useful cluster of fintech companies appearing between Dublin and Belfast, and that's been driven by the Fintech Corridor project of which we're part, and that's something that InterTrade Ireland have been funding and supporting in the background. And then finally, there's the M1 corridor, which has been headed by Dundalk Chamber of Commerce, but it covers the area from Drogheda to Dundalk to Newry, and it's about making sure that it's not, the Dublin-Belfast corridor is not just about Dublin and Belfast, but it's about the piece in the middle. And we have a website, we're revamping that. We'll be coming out with a new program of support, or program of promotional program in the next few weeks. So that's something to look out for in the next month or two. So if we roll on there, there's a couple of cross-border programs we have been running in the past. Many businesses here this morning may have participated on these. And the goal here at the end of the day is to help the businesses do better business, either to make through connections or making sales in overseas markets or enhancing skills. But it's something that we will continuously roll out. And if you'll see on the next slide, we currently are involved with Newry and Mourne and Conor Patterson's team there, and also in Meath with Joe English's team. And we're rolling out an Innovate Accelerate Europe program where we're taking companies from our greater region, bringing them and introducing them to European markets and giving them the support that they need to help enter into those markets. And then there will be opportunities, and we heard the Minister speak this morning about the Peace Plus programme and the additional funding that's going to be made available and rolled out. And we're going to see more details on that towards the end of this year. So again, there'll be opportunities from it. So if I just move on then. So I'll skip that because for time purposes, I think we all know Brexit has happened, but what it has shown up is that there's a couple of real practical issues: supply chain, transport, regulations, customs, and so on. They are causing issues for some, but they're not insurmountable, and there are supports to help. And we have a Brexit advisory service. And if you just move on again, please. One, I suppose, key part is that the Good Friday Agreement and the Northern Ireland Protocol ensures that goods flowing north and south can continue in that vein, and that has presented a massive opportunity. It also means that businesses in the north of Ireland have the advantage of being in both jurisdictions, and it keeps them in the EU for customs purposes, and that can help with exporting through to the EU. But it also means that this region has a great opportunity because it provides that dual access. On the next slide, I just wanted to mention that we have Brexit support. Now, I know Deirdre touched on this with InterTradeIreland, but at a local level, in each of the counties, local authorities in the Republic, we have rolled out business advisory services. So, for example, one of our business advisors is Martin Agnew, who is one of the speakers later on this morning. But in addition, we've run customs workshops. There is a customs employment grant. There's various Brexit loans for businesses that are experiencing Brexit issues that they need to secure working capital for. So it's just to mention that those supports are available. And if any business wants to find out details, certainly they can come into us or they can talk to InterTradeIreland. The next slide. So just a little bit on the future then, and if we roll this on now, please. Yeah, there's a couple of issues have come up about a number of years ago, about 3 or so years ago. The OECD carried out an in-depth report looking at small business in Ireland, and it came up with a series of challenges and areas that businesses needed to just take a look at. The government, in response, set up an SME task force to, I suppose, sound check those. And what they've come up with is this list of 9 that's in front of us here today. And it's basically saying, look, at companies for the future really need to look at how can they improve competitiveness, their productivity, can they scale, can they find new exports, can they innovate, can they work as clusters and learn from peers. The whole green agenda is not going away. If anything, we see with Ukraine and energy prices and so on, green is going to come much more to the fore. Having access to credit, having the right financial skills, and the whole new world of digitalization, all of those present not just challenges but opportunities. It's important that businesses, grasp some or as many of those as possible, so as to try and grow their business. So if I roll on very quickly, and if you, so maybe if you move to the next slide, because they're going to come up in single bullets. And again, to the next slide, to touch on competitiveness, we offer a lean program. What I would encourage any small business to do is, if they haven't already, to look at this program. We subsidize 90% of the cost, but what it really means is that it improves their bottom line. It takes out duplication. It looks at how are they operating, where can savings be made, what can they do better. But what we have found is that the businesses that go through this come back to us a year or two later and say, I want to do it again, but I want to do it in a different part of my operation. And it applies not just to manufacturing, but to service businesses. The second thing on competitiveness on the next slide is there's a new Advanced Manufacturing Training Centre of Excellence. We all hear about skills being important, but this is a very significant development. It's located in Dundalk. It's of national significance. It has been kitted out at a cost of close to €8 million. But anybody in the manufacturing area who has staff that need to be reskilled or upskilled need to make contact with the Advanced Manufacturing Centre of Excellence. I can't stress that enough. It's a state-of-the-art facility, but anybody going through that centre will come out, and that will enhance the productivity of any manufacturing operation. So I'd encourage you just to look that up and follow through and make an appointment if you can. Next up is the Green programme. Again, green is going to be more and more important as into the future. We launched this last year. We put 20 businesses through in the last quarter of last year. We've already had about 10 or so businesses go through it this year. But any small business can take this program on free. We will put in a specialist who will come up with a set of recommendations in terms of how they can improve their green footprint. And it's something that the larger companies are asking their suppliers to prove, have you got green credentials? How sustainable are you? So that's just one to watch for the future. Next is on the area of innovation. There's a couple of innovation supports. We ran a program last year. We'll be running a new program again at the end of this year. We're already running Innovate Accelerate with Newry and Mourne and Meath that I mentioned. But in addition, there's different supports like the IP Start, if you want to protect your intellectual property, innovation vouchers and agile. So we'll just move on. Financial capability, enough said there. New markets, yeah. In the area of new markets, again, there's a series of supports. Some are provided by ourselves, some are provided by EI, but again, talk to us about those and we can put you on a path to help you identify new markets, be they e-commerce markets, virtual or goods exports. And next, please. And just to wrap up, we support a number of clusters where very often you're not going to learn everything in a classroom. We all know that, but by listening and working with peer companies, you can gain so much. And there's a number of networks in the food, the retail, the engineering, and the connected health sector that we support. And I would encourage you to make contact with us and we can put you in touch with any of those. So I'm going to wrap up very briefly. Apologies about the technical hitch up at the beginning. I suppose the key message is look us up online, make contact, and we can put you on a path to help identify what best support suits you. Okay, thank you.
Well done, Thomas. Really appreciate it. Thank you. Worth waiting for. Thank you to everyone who's been posting on social media. A big shout out to the local enterprise office in Meath, because they actually posted a screenshot of me and they got my best side. So thanks to the guys there in Meath. A reminder of the hashtag Cross-Border Conference 2022. Folks, our next speaker is Conor Patterson from Newry and Mourne Cooperative and Enterprise Agency. He, of course, supports businesses across 5 business parks, and he's well placed to address the future challenges and opportunities for businesses on the Northern Ireland side of the border. Conor will be here in person for a question and answer, but he's recorded some advice already. Let's have a quick look.
The most successful businesses are those led by owner-managers that have the pragmatism to adapt, are light on their feet, take nothing for granted, look over their shoulders, and have the energy to move quickly to make the changes they need to make in the face of new circumstances. Why say this? Because being in business is risky. Insecurity is part of the deal, you know that. Every generation of entrepreneurs has faced its own combination of challenges and of opportunities. It's just worth reflecting on that at this time when we are faced with the outworking of the COVID pandemic and of Brexit, and now just in the last fortnight of war in Eastern Europe. Strip out all the hype, all the buzzwords. The likelihood of sustained success, of survival and growth, depends on the makeup of the guiding entrepreneur. It is, and experience around the world confirms this, about the nature of that person first and foremost, and the product or the service second. Because no matter how good prospective products or services might be, without the right people to deliver them at the right price, on time to the right customers, they will never translate into sources of wealth in the real world. All of that said, there arise at key moments in history structural challenges which are often the product of human decisions that misfire, of ill-conceived policy changes that will require policy intervention to fix. Free markets in the classical sense do not in practice today exist. Modern markets are shaped by policy in ways that mean that often entrepreneurial dynamism alone is not enough to gain entry to a market, to sell there, and to then make money to make that risk worthwhile. Tariff barriers and non-tariff barriers for those businesses barred from gaining access to one place because of their location in another place, these are very real constraints externally enforced by government policy. And only a government can in those cases adopt policy to remove such barriers or mitigate their effects. Brexit is the obvious external policy shift which presents an ongoing challenge for businesses in Northern Ireland and in the Republic, which have relied on bringing in raw materials and components and/or equipment from Britain. Many have attempted to work with their suppliers there to try to encourage them to complete the necessary paperwork and continue shipping those inputs while trying to negotiate with them not to increase their costs, and for many that has been a hard sell. Many of our businesses, many of you, will have had to find alternative sources of supply in the Republic or elsewhere in the EU. Until and unless the British government changes its desire to leave the EU and to have the freedom to diverge from the regulatory framework which governs access to EU markets, it will continue to be thus. To date, it has been a case of adapt or be damaged, and many businesses have today already done so. These figures graphically show that there has been a shift. There have been opportunities, particularly for those able to produce goods within Northern Ireland, sell them unfettered into Britain and the EU, and notably in food and drink and in pharmaceuticals. However, I have to say that without a new policy framework, we are at risk of resetting the all-island economy back to the early 1990s. There is deep concern in the Northern Ireland business community about the extent to which the all-island economy is being fractured, the extent to which Brexit is disintegrating the economic efficiency gains that have been made over the last 30 years. While Northern Ireland is technically in the EU single market for trade and goods, and while a series of derogations were drawn up to enable that, what we now know as the Northern Ireland Protocol, there remain de facto frictions, among them labelling, right to repair, qualified persons, which are barriers, the overcoming of which impose costs which are not borne by producers elsewhere in the single market. More importantly, the focus of the protocol is in one part of the economy of the North only, the trade in manufactured and primary produced goods. For services, the Northern Ireland Protocol offers no clear pathway to increased pan-island collaboration, because future trading arrangements for services sold from Northern Ireland into the EU have not been agreed. A discussion, never mind an agreement, on the future of trade and services has been deferred until the withdrawal agreement is successfully implemented. This has not happened because the UK has not implemented the terms of the Northern Ireland Protocol, which it committed to in December 2019. The same applies to the mutual recognition of qualifications, staff mobility and data exchange. All of this has potentially huge implications for services companies in the North bidding for public contracts in the South, for example, and also for teams of technical experts from finance to construction to healthcare being subcontracted from the north into projects in the south. During the Brexit negotiations, officials at the North-South Ministerial Council carried out a review of the areas of North-South cooperation, bringing benefits to citizens which would be affected by Brexit. This mapping exercise identified 147 areas of joint working, of collaboration, which had been enabled by the Good Friday Agreement framework and which were at risk because of Brexit. These are issues that hard work, resilience and adaptability in spades will not overcome. These are real non-tariff barriers affecting pan-island trade in key sectors north and south, and it can only be addressed by a government with the powers to do so, a national government, which the Northern Ireland Executive is not, but which the Irish government is. As a first step, we need that mapping exercise to be updated to take account of the UK government's apparent intent to pursue a path of divergence from the EU and to assess the scope for the Irish government to take action within the terms of national policy to address the impacts of that on North-South trade and cooperation. Another structural challenge presented by Brexit, which will require a governmental solution, is the loss of EU structural funding after March 2023. 60% of the funding used by government in the north to support businesses starting up and growing over the last 30 years has come from the European Union. Those funds will not be available after March 2023. There will be a special Peace Plus programme which will be put in place from 2023 to 2027, but its focus will be on the very necessary work of peace building. The very important other work that is done in every jurisdiction in Western Europe, including in the Irish Republic on, might I say, a very significant scale, to help people to establish businesses and to ensure that those businesses mature into long-term successes in a complex, hyper-competitive world. There's currently no clarity as to how that work in the north will be funded beyond the beginning of next year. This in a jurisdiction in which the private sector is already substantially smaller per capita than in other regions in these islands and needs to get bigger to generate more employment and tax revenues, so that the long-run effects of the isolation of the north geographically from Britain and politically from the Irish Republic for most of the 20th century can be addressed. It is unclear how the British government intends to use its Shared Prosperity Fund, set up to replace lost revenues from the EU, beyond investing in levelling up projects in so-called red wall constituencies in England. This is a real and present challenge for the business community in the north, including many of you at this event, as well as those more generally interested in this island prospering. And it is one that the Irish government can intervene to help address through its Shared Island Unit. Entrepreneurs, assisted by supportive government policy, have done much to transform the economy of the north and of the south in our adult lives, such that our kids today enjoy a quality of life and career prospects that many of us would never have dreamed possible. That was achieved on the back of the dissolution of the barriers to the movement of goods, of workers, of shoppers between the jurisdictions. It is now vital that the powers that can enact, that can legislate, do so to ensure that new barriers do not get re-established to prevent workers moving freely between north and south, or entrepreneurs from one jurisdiction being able to freely set up and grow businesses in the other jurisdiction, that ensure technical expertise can continue to be shared, that services providers can collaborate to improve the lives of citizens. So much can be done in this space by the sovereign EU member state government on this island, within its own national policy ambit, under the auspices of its responsibilities under the Good Friday Agreement, in the way that it has done with the European Health Insurance Scheme for residents in the North, as well as access to EU educational exchanges for students from the North. The costs of such policy intervention to address the discontinuities which Brexit has thrown up beyond the trade in goods will be modest, but the rewards in turbocharging pan-island trade have the potential to be enormous.
Thank you, Conor. Amazing graphics. You should be working with me at the BBC. Fantastic. Customs, a complex issue that importers and exporters on both sides of the border are increasingly having to navigate. Martin Agnew is from Across Borders Consulting. He's a customs and trade consultant with almost 20 years experience in the UK, the EU, and further afield. He's now going to take us through what to watch out for and also what we can do to enable more trade in 2022. Good morning to you, Martin.
Good morning, Mark. Thanks very much. Looking forward to today's session. Screen sharing okay?
Superb, well done.
Perfect. Okay, so again, we're obviously going to talk through some of the issues with customs. Obviously, customs has become a paramount issue in our minds when we think about trading goods. Through this year, obviously, and last year as a result of Brexit and the customs rules that came about in that. My experience is that I did work as a customs officer in HMRC in the UK. Also worked with Ernst & Young internationally, helping multinational companies set up in far-flung markets, whether it be, Asia, Americas, and obviously looking from that experience to, is kind of useful for this scenario where you have a business setting up in a new market, dealing with the risks inherent in that market, looking to submit the right documentation for customs to enable their supply chains and their business in that market, and obviously trying to keep costs down as much as possible. So our team at Across Borders Consulting is a truly cross-border team. We work very closely with the agencies, Thomas in Louth, of course, Deirdre, Maguire in InterTrade in Newry, and we work with a number of those organisations to deliver custom solutions. So look, getting into the real mechanics, the nitty-gritty of customs, and we are a team of cross-border professionals drawn from industry, working in trade compliance roles, drawn from consulting firms, so expert sort of legal side of customs, and then of course customs authority. Today what we're going to talk about is the customs basics, managing taxes. What is customs? What is the current landscape, and how do we look to manage those? Talk about some of the customs obligations, north and south, that businesses are experiencing. Some issues are similar both sides of the border, others are different, and there's obviously nuances, in particular with Northern Ireland around the Northern Ireland Protocol and some of the opportunities that brings for Northern Irish business. We'll talk about some of the common issues from 2021, give a customs update as well, just on some of the things that are changing, some of the things to watch out for this year that businesses should be aware of. And then, of course, because we're looking at how to deal with these new rules, we're looking at, obviously giving advice on how to plan, things that Deirdre talked about earlier, how to plan, how to measure customs, and then looking to remove some of those costs if possible, and how to manage customs compliance and documentation in the best manner possible. So just initially touching on some of the basics on managing taxes. So just to set the landscape, as we know, the UK left the EU on the 1st of February 2020. That was the legal reality. That then, therefore, afterwards entered the transition period, where, of course, things remained effectively the same for customs. The movement of goods stayed as if the UK was in the European Union. Of course, what changed then was on the 1st of January 2021, where the UK and Great Britain in particular left the customs union and single market. Northern Ireland, thankfully, does remain part of the EU single market for goods and via the Northern Ireland Protocol. So again, given that opportunity to access both markets. What also happened was that the EU and UK agreed a preferential trade agreement very late in the day, a few days really before the 1st of January, and that offered the potential to remove some of these customs duties. And again, the businesses have sort of, struggled to some extent to keep up with that, to keep up with the rules, to keep up with the certification requirements in order to make that happen. Cross-border trade has been protected and enhanced on the island of Ireland, which is great. There have been some rough spots, but hopefully, with the Northern Ireland Protocol and some of the negotiations, those will be remedied over the next while. So the basics again, what does it mean? So there are customs controls on the movement of products between GB and the EU. There are no customs controls on the movement of products between Northern Ireland and the European Union. There are a level of customs controls on movements of products between GB and NI. There are some complications in supply chains, of course, because as we've talked about it, and I think Kerry touched on it quite a bit earlier, was just that supply chains are changing. They were changing anyway for a lot of different reasons. Brexit, of course, has exacerbated that. COVID, and now we see another crisis that may involve, a certain shift in some supply chains. Where that happens, then the customs treatment really does need to change. So, one example of that's pertinent is goods that move from the EU to the Republic of Ireland or even Northern Ireland, how that actually is done from a customs perspective, mechanically, how that's done within the rules is really, really important. So there are procedures like transit to manage some of those aspects, and there's various different ways in which you can manage your customs. The EU-UK Trade and Cooperation Agreement was very good news, although late in the day, and it does allow you to remove tariffs on qualifying products. The key points there are the proofs of origin required, and that there are rules that must be met to allow for the elimination of the tariffs, certain certification requirements, things that you need from suppliers in GB, for instance, if you're importing into the Republic of Ireland. So again, some things to think about there in terms of planning and setup. Again, touch this very quickly, customs is a tax, so not to lose sight of that everything that you submit in terms of declarations, whether it be through TSS or whether it be through the AIS system in the Republic of Ireland, is a tax declaration. Essentially, you can think of that like a tax return. You are submitting data that needs to be accurate, complete, and again, you need to do your sort of due diligence in that to make sure that data is accurate and that you're content. Of course, there are ways to minimize things like taxes within the frameworks. We've talked, other speakers have touched on some of the customs facilities that there are and some of the procedures and easements that are available. And again, it takes some planning to identify those. So what we really encourage is that businesses, map their supply chains and then start to plan. Once you can measure the cost, then you're able to plan to remove some of these costs. So that's a sort of critical point. The other thing that obviously businesses struggle with, of course, is the paperwork, which again, the free trade agreement was never designed to remove. It was always going to be there. So luckily there's the facility of TSS in Northern Ireland to, smooth over some of those requirements from GB to NI flows. But again, there is some information requirements that need to come from the business. And this piece really does require a little bit of planning, because the elements of data touching on value, classifications, origins, can come from different parts. It can come from suppliers. Some of the information can come from transporters, logistics providers. Some of the information needs to be driven internally, could be from sales teams, procurement teams. It depends on the scale of the business. So again, there's quite a bit to think about there in terms of setup for a business. I think Deirdre just touched on it earlier as well. Just the tariff classification is incredibly important in terms of what your customs costs will be, and that's really north and south. Obviously, there's different ways to remove and different mechanisms to remove customs duties potentially, north and south, and some the same. So again, but as a first starting point, it really is incumbent and important for a business to realize that if they're acting as the importer or getting that responsibility, bringing the goods across the border with customs, then it really is important to understand what the tariff classification is. Other really important other important pieces that go in a declaration are the customs value. So again, often this is the invoice value if you have a sale. Other times it's not. Sometimes it's free of charge goods. Sometimes we're transacting with related parties, and that can change things significantly within the customs rules of what value you apply. Of course, the value is incredibly important, as we know, in order to assess what the tax would be. Origin is incredibly important now in our context, because we have a free trade agreement and we need to know what the origin status is. There's different rules for preferential origin, which deals with free trade agreements. So again, we need to, we need to be thinking about what that origin status is. Have we got the proper proofs from suppliers? Have we got the certification available at the time of import to be able to prove that origin and use the free trade agreement if we want to claim it? Some of the customs obligations to think about is, again, if NI and ROI businesses are sourcing products from Great Britain or the continent, it's really important to understand what the routing is. Same on the export side, of course. The customs piece now has, obviously, it's got rules, and you kind of need to understand what your supply chain is and then map the customs points on that, which is very much what we have businesses to do. Once you can do that, you can play around and see if other supply chain routings work, if there's facilities and customs easements that might be in play in order for you to remove some of those costs. But these are some really critical questions at the start that you need to be asking yourself. You need to be asking suppliers, what is the transport route the shipment's taken? This isn't always obvious. Sometimes you think goods come from GB potentially, but actually they're not. They're coming from Germany via GB. And of course, that can have a huge impact on the customs treatment and what you need to do as an importer, as a person receiving product. Who's responsible for the export clearance? Again, Incoterms, trading terms, these need to be set out at certainly early on in a transaction. So before the goods arrive, you really need to know who's responsible for the export, who's responsible for the import. This becomes an incredibly important piece when you're looking at enabling exports as well, because the mechanics of that will allow you potentially, if you're a Republic of Ireland exporter, to access the GB market in a much more efficient and a much more cost-effective way. What luck do you want for your customer in GB? Do you want your customer to have, to be dealing with the taxes, or do you want to set up a structure or a mechanism that does that essentially for them? So again, once that's understood, it's possible to plan how to manage customs clearance and tax obligations. Where a company is the responsible party for import-export clearance, they sort of need to ensure that the following things. Are you able to act as importer-exporter for customs and regulatory purposes? So are the necessary registrations in place? Have you got the communication paths with logistics providers, with agents? Are you able to communicate the information that you need to communicate in order to initiate an import, initiate an export? If goods arrive, are you able to get that information? Often some of this does reside in the business as much as with other parties. Of course, customs clearance agents are there to enable this on your behalf, and that's the traditional model, the outsourced model for clearance. But you need to think about how you instruct them so that they're doing the job that you require and making declarations that are accurate on your behalf and not incurring you to extra risk or extra cost. Do you have facilities in place to manage taxes at import? So again, where taxes do arise, whether they be customs duties, excise duties, import VATs, do you have the facilities to deal with that? There's different ways of dealing with that where they are incurred. So again, is postponed import VAT accounting in place? Is there a mechanism to deal with the efficient payment of customs duties? Some of the common issues then we've seen from the first year. So we've had the advantage of having 1 year post-Brexit to kind of see how things settle down and see what the common issues are. And again, a lot of it really falls down on just communication and perhaps a lot of this coming late in the day for businesses and not having time to prepare by virtue of that, but also by virtue of other priorities, COVID and those types of disruption. So again, what we've seen from suppliers is, of course, incomplete paperwork, a lack of understanding of who is going to be the importer exporter, which can create quite a lot of confusion. And can create unanticipated costs. So again, if you don't know you're going to be the importer, or if you've been listed as the importer and you didn't know it, then again, extra costs can arise. So it's really important to kind of map out these supply chains and understand where your products are coming from, and then looking at the products classifications and look and see how you want to receive and dispatch. The TSS, of course, has been a great facility, but again, as businesses have got to speed with that, some businesses have built up supplementary declarations that need to be completed, and that's a similar situation in GB as well. And the Republic of Ireland is slightly different because there really wasn't that much of a facility to do that. So again, different issues in different jurisdictions. Data points, what's universal is, of course, just confusion about what information needs to go on a declaration. So again, customs and the EU requirements do require certain things to be listed. Obviously, I've touched on the most important, the tariff classification codes, origin, valuation. There are other stuff, of course. There's weights, there's different indicators that have tax implications. So it's really important to get these things right. It can be a lack of understanding of responsibilities at the border. So again, the Incoterms piece is so important to understand, how you're going to transact, whether it be at import for instance, from GB, or again, if you're exporting to GB from the Republic, or even if you're exporting from Northern Ireland to continental Europe via GB, you need to have set up the proper responsibilities, who's doing what. And again, that will allow you to be able to plan and have control of your supply chain and have control of the customs touch points in order that you can then look to, mitigate some of these costs. Inability to have taxes paid. So again, there's different ways of paying taxes, from potentially an agent doing it for in your behalf, or again, looking toward doing it yourself, using deferment accounts. There've been changes in that regard as well. Inability to meet import-export licensing requirements. So of course, customs is a tax, but it also is to do with the supervision of goods coming into market. And again, it's really important there that the correct licensing requirements are met if they are required. So again, the tariff classification would indicate what other measures there are for a certain product to be imported. So really important to have a think about, if they can be met, and to ensure your classification is correct in the first place. There's a lack of ability of customs agents to act as indirect reps, and this is more of an issue, obviously, for the Republic of Ireland. This means that essentially you don't share liability with the agent. Really, you're working under direct representation. So when a customs clearance agent makes a declaration on your behalf, they're doing it in your name, as if essentially they were you. The one thing that there wasn't so much of in 2021, I guess, as given the circumstances, were audits. Now, the indications are, of course, from HMRC and from revenue that those audits would increase this year. Of course, there's a lot of things to audit as well now because of the increase of declarations, of course, but also things like the origin and the free trade agreement. Claims. Also, the supplementary declarations, of course, has that being accurate and chasing up supplementary declarations, for instance, in Northern Ireland that haven't been received. Some of the best practices we've identified. So again, it's a good test to look at the first year's trade, to see where the gaps were, to understand where those difficulties were, and where you can do that, then you can start to map, plan, and develop a customs awareness to deal with those issues. So again, it's really important to do the planning based on identifying gaps. So if you do an import review of declarations, for instance, supplementary declarations in Northern Ireland from the first year's trade, then you can see where issues were. So this is something we would extensively help businesses do, to look where those gaps are, and then to put in place systems and processes to remediate them. Any issues that are not proactively dealt with, of course, will increase costs and risk. Customs isn't something that's going to go away. So again, it's important to set up for it and to be ready to deal with it like you would with any other tax, like VAT, like PAYE. It's essentially within the same structure and how it's administered by the authorities. So key points: understand what the additional costs are to the customs, ensure compliance obligations are being proactively managed, and consider developing some level of in-house expertise to deal with customs issues, because whether you're doing the clearances yourself or not, you will need to understand what information goes from your business to the authorities, whether it be via an agent, whether it be via TSS. There needs to be a level of control and understanding there. So, that's a particularly important piece as well. Just to touch on some of the updates this year, I won't go into great depth. So TSS obviously will continue to operate in Northern Ireland for 2022. They are chasing up supplementary declarations and of course payments where they are required off the back declarations that haven't been completed yet. So initially there's a simplified frontier declaration made essentially, and that requires a supplementary declaration which completes the tax information and then would bring about any tax liability. So that's being chased, of course, by TSS and HMRC. Implementation of CDS caused a little bit of change at the back end of last year in Northern Ireland. So again, import declarations have changed from the old chief system, which was there from the 1980s, and has moved to the CDS system. Now this has led to a slight change in the way that taxes are paid and deferment facilities. So some businesses have had to apply for more EU-centred deferment facilities rather than a GB as may have been existing. So again, there's some changes to flag there. There's a removal of easements. So again, Great Britain essentially has removed easements from the 1st of January 2022, and they're going to exercise controls over goods as if they were rest of the world goods being imported into GB. Now, there is a temporary easement for Island of Ireland that still remains, which is really good news, and hopefully that continues. The free trade agreement, as I flagged, again, really important piece there is that where that's being used, it's really important to think about the rules of origin. It's really important to ensure that you have those pieces that are important to make the free trade claim accurate, that they're in place. Transits over GB and indirect routings, you need to ensure customs points are managed there. So again, really good news, the Northern Ireland Protocol for the island of Ireland in particular, that there aren't any controls there. The difficulty does arise essentially when goods move over GB, because that's where a lot of the customs controls come in. So again, anytime supply chains move over GB through GB, whether it be transiting or whether to be procured from there, or whether you're looking to export that market to that market, then it's really important to put some planning and thought into that, because there are things that need to be considered there that would affect your ease of access. Now, again, if you do that planning and you're able to access that market in an efficient and cost-effective manner, then that's a real enabler and a fantastic competitive advantage that you would have over businesses that would not. So real encouragement to do the planning there as well. Deirdre touched on some of the changes as well. The classification codes do change annually as well, just to point out. Again, enabling exports. Great Britain, of course, is a large market for the island of Ireland. So ensuring you are in a position to enable exports of products, movement of products to GB is going to be incredibly important going forward, and really important for Irish businesses on the island of Ireland, of course, to remain in that sphere and to be able to access that market. Of course, on the import side, there is a certain possibility to shift some supply chains directly to Europe, but obviously it's still possible to access customer base and access the supplier bases in GB. And again, that can be done, but it's really important to understand the whole setup. So looking at everything from the Incoterms that are agreed with suppliers and with customers, and again, looking to enable all the mechanical elements that need to go in there for customs in terms of how you submit your declarations, what information gets there, availing of all the easements that are in place. Of course, in Northern Ireland, there's a number of easements directly related to the protocol, which again are excellent. But you need to think about which one is the most advantageous for your supply chain, for your products and your business. So again, some thought and planning needs to be put into that. The UK Trader Scheme might be the answer. It may not. Maybe the classification exercise is the answer. Maybe you need to look at the free trade agreement. So there's a number of different ways to skin a cat on this one. And again, it's going to be specific what the best way is to do that. So it's really important to avail of the planning services. I think that the InterTradeIreland provide and the local enterprise provide as well, because they really do enable you to have the expertise and the skills to look at these things. Then just some thoughts on advice and next steps. So it has been a period of change, of course. So where that change occurs, then there's obviously things to do. There's a period of adaptation to get ready or to adjust to the new rules. There's putting in place processes, systems and procedures, to deal with that. So the things that we always recommend are, first and foremost, map your supply chain, know where your products are coming from, know your suppliers, know the Incoterms, know the trading terms that you've agreed with them. Similar, obviously, in the export side, really important for export enablement. So don't lose sight of that. No reason why you can't access markets, whether it be GB or even internationally. That's, of course, that's the way it's always been. Look at that export enablement piece and remove as many barriers as you can to trade. There certainly are a lot of facilities within customs to do that, and I think with the right setup, you can make huge inways there. The other key point, review imports and exports in 2021, whether it be your TSS declarations, whether you be waiting to do supplementaries and catching up with that, or whether in Northern Ireland or whether in the Republic, again, that you've made declarations in the first year. Are you confident that those declarations are accurate? First of all, do a sanity check. Are you confident that they are your imports? Make sure that your OI number, your customs identity, importer exporter registration, has been used correctly. Again, that's really important. Consider submission and accuracy of declarations, which of course is the point of the import export review, to look at those aspects. Again, identify gaps. Where you identify gaps, then you can obviously look to remediate them, and often these errors are systemic, so to catch them now is much more important than to wait till later and deal with the built-up risk that there would be, but also the likely built-up costs. Measure costs. Again, look at what costs there are in your supply chain. Doing a review will give you a great sense of that, whether it be from what you've declared or the gaps. You'll have a better picture of what customs costs there are as well, to think about. So, when you're supply chain planning, you're looking at your supply chain and all the commercial costs that are within that. But, don't forget about the customs costs as well. They're quite significant, of course. So again, really important that those costs are measured, and then where you measure and are able to visualize them, then you're able to remove them, but also you're able to deal with them and use some of the deferments, use some of the facilities are there to enable you to pay in a more efficient manner. Future proof, again, so where you've done that exercise, future proof with processes and SOPs. So again, put in place some communication paths. Again, often communication paths break down, and the wrong information might be instructed to the broker, whether it be from the supplier or from the business. So again, once that's kind of set aside, then you can look to essentially create processes that are homogenized, that deal with 80-90% of what you would do in a declaration. Cost savings. So again, different schemes in Northern Ireland in particular is the UK trader scheme. There's potential for the duty waiver, free trade agreement. There's a whole gambit of customs reliefs that are there within EU legislation and always have been there. So again, it's looking at all these things, getting the information from your supply chain, looking at the customs touch points, and then figuring out ways to remediate any of those costs, and of course make your supply chain as efficient as possible. It's inherently a good exercise to look at your supply chain anyway and understand where products are coming from and how you're going to get them to customers as well. Use postponed import VAT accounting. So again, where that's applicable, that's a really, really important facility. VAT, of course, a huge cost, 23% in the Republic. And again, that's something that you want to be able to handle effectively. And that is a really nice measure to deal with that. So make sure you're using it, make sure you're using it correctly. There needs to be a bit of work done on the customs declaration to enable it, and a little bit of work then on the reporting side on the VAT return. So again, a really critical point. Consider resourcing customs training. So, have you thought about accessing customs training and planning? So you don't need to become a customs expert yourself, but have you access planning so that you've looked at some elements that would be important to your business? Insource or outsource. So how much do you want to take under your control in the business from a customs standpoint? How much do you want to outsource? Are you able to manage the broker? Do you know what their responsibilities are versus yours, versus your suppliers, versus your customers? So again, mapping all these things out and understanding it means you don't have to be a customs expert, but you can set up a process, you can set up procedures that enable this work for you. Key thing then, there are
Martin, sorry to interrupt. We are running out of time. Could you
Mark, I was just about to finish.
If you just wrap up, that would be super. Thank you.
I will. Apologies, Mark. So again, there are a wide range of supports that you can access to do that. We obviously work as an InterTrade Ireland vendor and similar for local enterprise offices. So please do avail of these supports and seek the advice. Don't feel alone or bury your head in the sand, because again, it's important to deal with these customs aspects. Thanks, Mark.
Martin, thank you. It's our fault. We should have given you more time. Such a complex issue, but you make it so simple. We really appreciate it and thank you. And if you've got a question for Martin or one for Conor or one for Thomas, please put it into the question and answer section, which you can see at the bottom of your screen. We don't have time for a question and answer live session, but if you put your name, your address, and who the question is for, those involved will answer your questions. I can see Deirdre from InterTradeIreland has already directly responded to people on the chat, or if you put your email address on there, you can get a private message back there as well. Folks, it's coffee time. We're going to have a 10-minute break. We'll see you back here at 11:20 on the dot. In the meantime, get the kettle on and I'll see you in 10 minutes. Welcome back, everyone. Hope you had a nice cup of tea or a nice cup of coffee. We're back and we are back with a bang. We're going to dive straight into the economic landscape. Where is the economy heading? Let's hear now from a man who knows. No pressure then for Oliver Mangan, the chief economist at AIB. Now, given the pandemic and those dreadful events in Ukraine, there is a lot to talk about. Oliver, you've got about 20 minutes. You probably need about 20 hours. We may have time at the end for a quick question or two. So if you do have a question, remember, folks, put it into that question and answer section at the bottom of your screen. In the meantime, if you can go to full screen, Oliver, we look forward to hearing what you have to say. Good morning to you.
Oh. Yeah, these are strange times, to say the least. I've been talking here for the last number of years. First of all, we had Brexit and how we'd resolve that. Then the last couple of years, we've had COVID. And I think I was speaking last year and I was relatively optimistic in terms of there's a path out of that. And now we're facing the crisis in Ukraine, and a terrible event it has been as well. I mean, I never thought in my lifetime I'd live to see war in Europe again and a massive humanitarian crisis that we are now facing and having those poor people in Ukraine. So it certainly adds a lot of uncertainty to the economic outlook. There's a fairly substantial presentation there. I'm not going to go through it all. The slides will be available to people afterwards. So I'm going to keep this high level in terms of where we're at in the economy. And of course, everybody wants to know what the implications are of the war in Ukraine in terms of activity, etc. So I think the first point is we have had a very strong rebound in economic activity last year, far greater than was anticipated. Obviously, the availability of successful vaccines was key to that. And COVID is subsiding, although it hasn't completely dissipated as a risk. There's still high case numbers here and in the UK. But certainly in terms of restrictions on activity, etc., that has largely abated. So the UK economy grew by 7.5% last year. The Irish economy, and I exclude our GDP figures, domestic economy grew by 6.5%. Very strong bounce back in economic activity. And with Omicron abating around the start of the year, we've had a good start in terms of data we have for January and February in both the Irish and UK economies, indeed globally. So we're set up for a strong period of growth. Now, obviously, what's happened in regard to the Russian invasion in Ukraine has put the cat among the pigeons. There's no doubt that that will have a negative impact on economic activity going forward. I think the other surprising thing last year, which is linked into this, was as well as a strong rebound in activity, we did expect inflation to rise, but nowhere to the extent that transpired. And there's been a very, very large increase in prices over the last 12 months, initially in commodity prices, energy prices, but beginning to spread out into other areas of the economy, pick up in wages, pick up in service charges, etc. And again, I mean, the headline there is what has changed in terms of the economic outlook in the last 12 months. Well, the strong rebound, the pickup in inflation, and central banks moving to starting to tighten interest rates. There's a chart there that shows you where markets now think rates will go and where they thought the rates would go 12 months ago. 12 months ago, we weren't really talking about rate increases. Now the UK has started to hike. The US is on the verge of doing so. It'll hike rates next week, and substantial rate increases are anticipated. And they're still priced in, notwithstanding what's happening in Ukraine. The view is the UK and US rates will get to around 2%, and the ECB will move away from negative interest rates. It'll be later to hike. But so there's been a substantial change in market expectations. We're into an era where we've been very used to very low interest rates. Despite what we're seeing in Ukraine, the uncertainty has brought the dampening effect on economic activity. It is going to push inflation even higher. So we could see inflation rates of 8 or 9% before long. I mean, that would have been, you'd have been carted out of the room in a white coat if you predicted that a couple of years ago. And central banks, they have a very difficult balancing act now in terms of, do we focus on the weakening growth that may arise, or do we focus on the rise in inflation? And I think markets have been volatile, but they still think that central banks will hike rates. They may not go as rapidly as it was anticipated. I mean, the expectation a couple of months ago was that we could get increases of 0.5% in March in UK and US rates. They are very likely to do that now. We might get an increase of 1/4 instead. They've pushed back the starting date for ECB rate hikes, but they still think over the course of 22 and 23, rates are going to rise, and maybe by 100 basis points in the Eurozone, and maybe by 200 basis points or 2% in the US and the UK. So that's a big change. Now, the crisis in Ukraine is going to add to that. We're already seeing oil prices spiking higher in terms of reaching $120, $130 a barrel. And just going to a couple of graphs here, I'll pick them up. Here's your inflation rates. I mean, the charts speak for themselves. I won't say going off the charts, but they are going to go higher. I mean, rates going up there to 6-7%, they are going to go higher. And one of the reasons for that is just what's happened to oil in the last 2 or 3 weeks. I mean, oil going to, on those charts, $110, $120 a barrel, it's touching 125, 130. And it's not just oil, it's gas, a broad range of commodity prices, particularly wheat, but also things like nickel. So commodity prices are on fire. So the bottom line here is, how does that impact economic activity? Well, there's a number of ways. One is higher inflation depresses disposable incomes, real disposable incomes. Wage growth is not going to keep track of the higher or spike in inflation. So that's going to depress economic activity. The uncertainty this brings as well is going to impact investment activity. And you think of central banks and governments find it easier to deal with demand shocks. So there's a fall off in demand. You can cut interest rates, you increase consumer spending, you can increase government spending, you can cut taxes, you can boost demand that way. We saw the tremendous supports put in by governments over the last couple of years to help withstand or help households and companies work through the COVID shock. This time around, it's not just higher prices, it's questions around supply of commodities as well, a shortage of wheat. I mean, again, who'd have thought the Irish government has farmers in this week pleading with them to plant crops? We could be short of wheat, if not to feed the human population, certainly for feeding stuff for animals, etc. So a shortage of wheat. The UK and the US are imposing sanctions that extend to oil and in regard to Russia. I mean, that's going to lessen supply in the world market. As it is, Russia is actually finding it hard to export into markets. There's a lot of people just won't take Russian oil. A lot of the oil companies are pulling out. So we're going to have a physical shortage of commodities. Russia and the Ukraine are big suppliers into the global commodity markets in terms of agricultural products, in terms of some of the minerals, etc. There's going to be shortages. So that adds to the risk to growth. There'll be disruption. We have seen over the last 12 months what we call interruption to supply chains, disruption to production, factories being shut down, finding it hard to get workers. So there have been delays in getting supplies. There has been delays in the production processes. There have been lockdowns. This war is going to add to that in terms of a shortage of commodities, a shortage of inputs. So that is a negative from the economic point of view. Now, I will say we're coming from a position, at least it didn't hit 12 months ago. I mean, the global economy recovered very strongly last year. We've had a very sharp fall in unemployment. We're back to full employment in most markets. So we are in a better position than 12 months ago in terms of coping with this, but there's no doubt that it will slow the pace of economic recovery. Now, it's hard to make forecasts in this regard. Growth was expected to be strong this year. It will not match the expectations that were there at the start of the year. Hopefully we're able to avoid recession. I mean, there's a lot of talk of stagflation, which means high inflation and no growth or possibly negative growth. I think governments are beginning to move to take measures in terms of supporting economies. We see it coming today in terms of the Irish government. There'll be substantial cuts in excise duties. We have seen supports for households in terms of higher energy bills. More of that will need to be done, but it's hard to offset the supply side shock in terms of a shortage of oil, a shortage of gas, a shortage of commodities. It takes time if you're diversifying away from other markets to replace some of the other suppliers. That just doesn't happen overnight. And coming into this, the oil and gas markets were very tight anyway, with very low inventories. In terms of non-Russian producers, they can increase supply somewhat, but not to the extent that will offset the fall off in oil production out of Russia. And then we've Europe. What I mean by Europe, I mean mainland Europe, very, very reliant on gas supplies. 40% of its gas supplies coming from Russia, so it's hard to see that being replaced in the near term. So I think there's a lot of uncertainty out there. It's a very challenging environment. We don't have much in terms of direct trade links with Ireland and the UK. I mean, we're looking in the sense that our gas comes from both UK fields, but also particularly from Norway, the North Sea. So we're not reliant on Russian supplies, but mainland Europe certainly is. And in terms of the forecast being revised downwards, it's more pronounced for EU economies outside of Ireland than the UK, the US, or Ireland. But there's still going to be negative effects there from higher inflation. So I think high prices are here to stay this year and probably next year. So we're going to have 3 years of high inflation. It is going to take, the war in Russia or the war in Ukraine looks like it's going to be a protracted affair. So it is a challenging environment. So just to quickly flick through some charts here. I mean, I showed you the change in interest rate expectations. In terms of foreign exchange markets, the euro is under pressure here because the Eurozone economy is seen as the most exposed in terms of its trade links with the EU, with Russia, its dependence on oil and gas supplies from Russia, and geographical proximity as well, having to deal with a massive humanitarian crisis. I think there'll be increased expenditure on defence, etc. Increased spending in terms of looking after refugees from Ukraine. The global rebound in economies, I think this is going to lose momentum over the next number of months. You can see the strong rebound in activity there. I mean, the uncertainty, the higher inflation will impact activity over the next number of months. We can see the rise in inflation. That is going to continue. I showed you the rise in oil prices to very high levels. Even since these charts were done, it's gone even further. House prices, just to say a word on that, both Ireland and the UK have seen very strong housing markets over the last couple of years. Some signs that the pace of house price inflation is slowing down. The UK market in particular remains very resilient. So again, this uncertainty, this hit to disposable income, will be another factor that will see a slowdown in house price inflation. But with a shortage of supply in both markets, it's unlikely that we'll see house prices fall back. They were the global forecasts. They look great for the next 2 or 3 years. And this is from January from the IMF. But you can probably take, 1.5% off those growth rates at least for the Eurozone economy, maybe less in terms of the UK. Again, the Bank of England, 4.7. The Bank of England is now forecasting 3.7 this year, maybe even lower. So growth is going to be impacted in terms of the effect of the crisis in Ukraine, the higher commodity prices, higher inflation, depressing disposable incomes. The UK, in particularly, before this, the Bank of England was quite downbeat. There's a number of headwinds the UK has got to face. The Bank of England, before this crisis, saw growth slowing to 1% by next year, which is a sharp slowdown from the 7.5% we saw last year. There's a number of reasons for that. There's going to be a big hit to household disposable incomes, not just from the surge of inflation, but higher taxes in the UK as well. There's no doubt Brexit has an impact on the performance of exports. There's been a marked fall off in exports into the EU. The Bank of England is the first central bank to start hiking rates, and expectations are rates are going to get to 2%. So you put that combination together, and there was already expectations of a marked slowdown in the UK economy in particular, and that will be added to by higher inflation. Now, the UK is fortunate in the sense that it's great security around its energy supplies than maybe other countries in Europe, but we will get new forecasts from the Bank of England in the next couple of months. I mean, the risk here is that we could even see lower growth than 1.5% that they're forecasting in January and early February before the UK crisis erupted. So just to bear that in mind, the UK was facing significant headwinds anyway. In terms of Northern Ireland, it's like elsewhere. You can see this very strong rebound here in the business indicators as the global economy recovered and restrictions were lifted. You can see the housing market quite strong in Northern Ireland as well, and a fall back to very, very low unemployment levels. So again, more than most economists, Northern Ireland was in a good position here, emerging from the COVID crisis in good shape, looking forward to strong growth. But as elsewhere, it's going to have to deal with these headwinds of higher inflation, etc. And for the Republic, again, the indicators, very strong rebound in activity. You can see there the indicators picking up. You can see the sharp fall in unemployment. You can see the strong growth in employment, recovery in domestic demand, but that higher inflation. But again, well placed for strong growth over the next couple of years. It won't be as strong as anticipated. So again here, high house price inflation continuing, likely to decelerate this year. You can see the shortage in terms of housing supply. Brexit, I won't delve into it. It's sort of gone into the back burner. That Northern Ireland protocol issue has to be resolved still. At least they're still talking, but I think there's bigger, I suppose, matters of focus for the UK and Irish and EU governments at the present time. So elements in place for strong Irish growth, but again, that headwind from Ukraine is going to dampen activity. So in summary, I mean, I've quickly flicked through those charts. The prospects were very good at the start of the year. There's a big uncertainty now. We know it's going to dampen growth. We know we're looking at higher inflation. We're going to have a depressing effect on real incomes. The pace of recovery is going to be slower. Central banks are expected to still tighten rates, and we have the ECB meeting tomorrow. But next week we have the Bank of England and the Fed. Rate increases are virtually, guaranteed from what the central bankers have been saying. I will say if growth weakens far more than anticipated, we won't get the same extent of rate increases. So I think central banks are going to be here. They're like me trying to predict in the next 6 months what's going to happen. It's very difficult. They're going to say, we are going to keep all policy options open. We have to respond to the current spike in inflation and what's occurred over the last 12 months. But we're not on a set path here. And I think you'll hear that from the ECB tomorrow. All options will be open. We don't want to generate a recession. We don't want to hike rates to the extent that it puts economies into recession and we have a downturn in economic activity, but we also need to get on top of this inflation problem. So I said I'd leave a few minutes for questions, and I'm happy to take those. As you can go through the slides, there's a lot there in 15 or 20 minutes. I suppose we think we may have problems, but when you see what's happening in Ukraine, it puts everything into perspective. But we are in for a very uncertain year in terms of this war. Looks like it's going to last. So I'll hand back to you, Mark, there. If anybody has any questions come in, just fire them at me over the next few minutes.
Thanks, Oliver. A lot to take in. And I almost feel as if we could do with a monthly, if not a weekly, if not a daily update from you. The overall question I would ask, and it's just one question, is, folks on here are trying to run their own businesses. They're keeping an eye on global events, local events, the economy in general. What advice would you have to businesses to keep up to date with the big picture? We know time is short or whatever. Just general advice for keeping up to date with the sort of factors you've gone through this morning.
I think you've got to, the inflation will be driven by the commodity markets in the near term. And I mean, we're all aware, we can see from the news programs every evening where oil is going to, where gas is going to. I would say what would be particularly worrying if we begin to see supply shortages. And it's an alarm bell ringing in my, because I like history. When I see the Irish government calling in farming organisations, I would say we may need to go back to wartime measures here, even though this conflict is 1,000 miles away, that we've got to become more self-sufficient. So I think where it really becomes difficult is if we actually get to a situation where there's a shortage of gas, oil globally, commodities. Now, we're not, as I said, the commodity will impact in terms of, there's lots of inputs such as nickel for the auto industry, things like that. So the supply shortages the businesses have been dealing with in the last 12 months, they could actually get worse. That's, and I know, having talked to a lot of manufacturers in the service sectors and waiting for goods to come in, it could be from China, it could be from anywhere. The supply shortages have been a big feature. So I think in terms of running your business, right, be conscious of that. And it's not our business to advise people what to do, but the feedback we're getting from people is a lot more people are sourcing materials locally where they can. And I suppose, so less, and this is come from COVID, this is not Ukraine. It's much easier to get us, if you're an Irish importer, to get stuff from the UK than from China or get it from France or wherever. So they're shortening the supply chains. I think this will accentuate that move. And again, I don't want to go back to what happened during the Second World War, but there will be more reliance on I think the UK will be going the same way in terms of looking at our agricultural sector. So I think security supply is going to be a big issue over the next 12 months. Now, this will pass eventually. I mean, and we are moving to greener energy and things like that. But this transition, from carbon to green is difficult. This makes it more difficult. So, the government can offset measures, say that there's going to be a big announcement here about cutting excise duties. They can offer household supports, offset higher energy bills. But actually, if I am short of fuel, if I'm short of commodities, how does that impact my business? So let's say you're a supplier of animal feeds. Big question marks around the supply there over the next 12 months, and probably more next winter than this winter. So the supply side, the supply changes, if you're running a business, that's where I'd be focused on. And put options in if you can in terms of alternative suppliers.
Very good, Oliver. Good practical advice there. Sobering advice, but fascinating nonetheless. We appreciate your expertise and we appreciate you coming to our conference, and hopefully we'll see you next year in person, and hopefully things...
In person, yep.
Yeah, and hopefully things will be a little more positive. Yep. Oliver, thank you. Oliver was talking about the supply of materials there. What about the supply of people? We're going to be talking now about recruitment and the retention of staff. Excuse me. That's what happens whenever you have a biscuit with your morning coffee. Yes, recruitment and the retention of staff we know is a key issue, and our next speaker knows all about it. Joe English is the head of enterprise at Meath Enterprise Office. The labour market, as we know, has undergone a bit of change in recent years. Joe knows all about that. He has some advice for us. Have a listen.
The changing nature of work and the gig economy. Brexit and COVID-19 are two tsunamis on top of the broader economic, social and demographic shifts already reshaping local labour markets. Digitalisation, globalisation, climate change, green transition, demographic changes are changing the location and the nature of jobs, as well as the composition and skills of the workplace. In many cases, Brexit locally and COVID internationally will reinforce these trends, accelerating the need for a rapid policy response. However, for some others, it could reorient them in new directions. Pre-COVID, cities in particular were typically well positioned to benefit from many of these changes, while the risk of other, mainly rural places, getting left behind was deepening. While COVID, and to a lesser extent Brexit, is accelerating the transition to the future of work, it could also reorient other trends, such as urbanisation, and potentially shifting some of these patterns. Before we get into the local situation, it is perhaps interesting to look at the global trends in labour market changes and the effect that COVID in particular is having on these trends. A recent study by the OECD produced the core data on the table I am now sharing. These detail the core longer-term trends in labour market dynamics, and they suggest how recent changes, particularly COVID, but also locally with Brexit, could accelerate or decelerate these trends. There are two core trends identified: the geography of jobs and the composition of local labour forces. The geography of jobs is changing, and skills demands are shifting. Automation and digitalisation, globalisation and climate change and the green transition will create and destroy jobs, but not in the same places or for the same set of skills. There will be increased demand for digital skills in all labour markets. However, it is estimated that COVID and Brexit could also open up new opportunities for job creation outside of the traditional high-growth urban centres. New production technologies, 3D printing, etc., telecommuting, e-services are boosting labour productivity and creating new local opportunities to decentralise jobs, production and public services. The OECD estimates that almost half of all jobs are expected to change as a result of automation, with agriculture and manufacturing having the highest share of jobs at risk. The jobs at lowest risk are those in the service sectors, particularly those in knowledge-intensive services. In general, the risk of automation decreases as the skill level increases. It is likely that COVID will increase the move to automation as firms turn to labour replacing technologies to respond to sanitary requirements and labour shortages resulting from the containment measures and reduced international mobility. However, this point actually allows for increased opportunities for companies providing systems and services to the automation industries. A final slide on the global situation shows, according to the OECD, where Ireland fits in the global risk list. COVID and Brexit, of course, will disrupt the global and local trends, but to what extent? This is not yet known. The popular press, academics, and policymakers have debated how COVID will impact cities and urbanisation trends, with some headlines declaring the end of cities, with everyone commuting from the Aran Islands to Siberia. Whatever the long-term effect, these two concurrent tsunamis are going to have an immediate and long-term effect on the local labour market, and how we respond to these changes will in no small way determine the future economic resilience of our region. Now that's the global context for changing market dynamics, but how does this affect the local market? Brexit is having and will continue to have an enormous effect on the local economy, and this is well known. The recently reported seismic changes in export-import numbers point to significant structural change underway in the local economy. The OECD, when referring to the COVID emergency, predicts that as emergency supports wind down, local actions will be front and centre in managing the economic recovery. This wind down, as we all know, is already underway, and the likely effects are unknown at this stage. Another recent study, again from the OECD, suggests that there are immediate actions that can be taken to help local economies rebuild better. These include bringing diverse stakeholders together to rethink local development approaches. And this conference is indeed an excellent example of that suggestion in action. This talk is all about the changing nature of work. There is undoubtedly seismic changes underway in both the technology and attitude to work. Before COVID struck and before Brexit was finalised, will it ever be, the local enterprise office in Meath and the Newry and Mourne Enterprise Agency, noticed a large spike in the number of people starting their own businesses. This trend has accelerated exponentially over the last 2 years. For example, in 2019, the local enterprise office in Meath ran 8 Start Your Own Business courses, while in 2021 we ran 18 such courses, with the course places filling up fast. The NMEA reported similar growth in their business start programs. Drilling down, it was noticed that many of these startups did not have any intent to grow their businesses in the traditional way of adding new employees. They planned to operate as one-person bands, and they were also going to have multiple serial clients. They were classic gig workers. We began to study the phenomenon of the gig worker and discovered that it was a growing trend across the world. On further analysis, we discovered that the gig economy works across a full spectrum of skills and professions. Close your eyes and imagine a gig worker. It is probably the person on the screen that is on your mind. But it is also these people. This is one of the fastest growing sectors in the economy and one that is least understood. The LEO and the NMEA began working with the EU Commission and some partners across Europe to understand this phenomenon and develop strategies and plans to support the individual gig workers, and also to explore the policy implications of the emerging and growing gig and sharing economy. Is it a liberating form of new employment, or is it a road to exploitation? The rise of the gig and sharing economies has fundamentally changed a number of industries in a few short years and has transformed the employment prospects and methods of working of many, many people. Digital platforms are, of course, accelerating this growth of the sharing and gig economy, and in further stimulating and diversifying it, has already disrupted the sectors of transportation, tourism, hospitality, professional services, and finance. New sharing gig economy entrants have fundamentally challenged the position of long-established traditional players, and this is expected to be only the beginning. This growing gig and sharing economy has significant implications for you as employers. There are distinct challenges, risks, and opportunities. What will it do to the availability of labour? Long-term labour costs. What will it do for long-term retention of skills and experience? How about the protection of data and IP? Will your competitors be fishing in the same pond? And how about the individual gig worker? Pricing of services, loss of benefits, saving for a rainy day, pension, healthcare costs. What are the policy implications? Social welfare, tax take, long-term social care costs, pensions? For further reading on this topic, may I refer you to our website, which is enteringthegigeconomy.eu. I suppose in conclusion, the one reality we as workers, business owners, employers, business support organisations and policymakers have in common is that we are all facing profound and expedited changes to the labour market. How we respond will determine the future prosperity of our region. Thank you very much.
Joe, thank you very much indeed. A bit like Oliver's presentation, challenges ahead, but you set out very, very clearly what the future will hold. Folks, we're going to drill down now on essentially what this conference is all about, cross-border trade and the experiences of those at the sharp end. We're going to have a panel session. We're going to hear from each panelist individually. And then if we've got time, we're going to give them a quick question so you know where to go, that Q&A session at the bottom, if you have a particular question. If not, I've always got a question. Áine Crilley is the Managing Director at the HR Elephant. Richard Hanlon is Chief Commercial Officer at Aon, and Adrian Gray is Director at Exitex. Let's start with Áine. Tell us about the HR Elephant. What a great name, and your journey to trading services right across the border. Áine.
Thanks, Mark. So look, guys, thanks very much for the invitation to speak this morning about the experience of the HR Elephant post-Brexit. You know, it is very hard to give a clear picture and real steer on exactly how Brexit had impacted the businesses such as our own, who operates in both jurisdictions, because, you know, we were hit so quickly with the COVID pandemic. You know, we were in the process of probably gearing up to really create opportunities from supporting businesses through the Brexit aftermath. You know, we had set up our office in Dundalk, and we were already established in Newry, and we were in the process of launching our office here in Newton Hamilton, servicing the South Armagh Louth border area. And then, you know, everything just changed. So COVID really threw a curveball that we could never have imagined. And, you know, fortunately for us, we have never been busier. You know, the endless stream of government support updates on job and business support on both sides of the border, it basically needed to go out to our clients in real time. So we were working around the clock just to keep up with the updates, to understand them, and then to be able to translate those out to the clients. So in reality, you know, for us as a HR consultancy, both the timing of Brexit and COVID, it led to a significant upturn in trade for us. In relation to our clients and cross-border trade in general, we have seen, you know, a variety of issues emerging post-Brexit. The most pressing of these is probably in relation to the cross-border workers who were working from home during the pandemic. And, you know, there was a major issue in relation to taxation. And, you know, I know that the Cross-Border Workers Coalition have been working hard in this space and hopefully are making progress with this. And it has been a very frustrating time for many businesses and individuals in this respect. We are, on the other hand, hearing stories of significant growth with many organisations and clients now really struggling to recruit. The labour market, as everybody is aware, is very tough at the moment, and it really is an employees market. So one of the key challenges that our northern businesses here are facing is really the inability to compete with our Dublin salaries, and with the ability to work from home and commute a couple of days a week to Dublin. The lure of the city is really impacted on our border-based business ability to attract in the first instance and then retain you know, top talent. But overall, you know, we would say the outlook, we believe, is fairly positive. You know, we're obviously dealing with a global crisis which will impact our economy here, and again, the cost of living, it's really dramatically increasing, and it's not being reflected in salaries. However, you know, we are very optimistic. We think, you know, there is real opportunity for cross-border businesses to deliver growth, you know, to really capitalise on the situation, providing we can get an end deal similar to where we currently stand, and to really make an impact on the local economy going forward, you know. So yes, Mark, that's probably my update in terms of our Brexit experience, you know.
Thanks, Áine. Stay with us. Richard, what's your experience been like in recent years?
Thanks, Mark. I guess I'll try and bring a slightly different perspective, if that's okay. Given my kind of day job is as an EMEA Chief Commercial Officer, so I'm working across borders, not just north-south here in Ireland, but across, you know, all of the EU and beyond, including into Ukraine. And what really strikes me is that the big trend that we start to really see take hold is around digitalization of trade. And by that, I don't mean, you know, digitalization of cross-border documentation. I'm talking about what's happening through the Internet of Things, through, Industry 4.0, because we know that innovation and new technologies are the proven economic drivers. And I think we've got some real enablers north and south in Ireland. And the work that's been done to create the Dublin-Belfast Economic Corridor, and in particular within that, the FinTech corridor. And I come from a FinTech background previously, ran a FinTech business in Dundalk, and watched the emergence of the skill set from Belfast all the way down to Dublin. And what's really fascinating about that as potential is that these are digital ecosystems. Ecosystems need interoperability. So it's no longer that you have standalone companies providing standalone products or services. They actually have to collaborate. It's the nature of business. It's the nature of Industry 4.0. And I think we've got such a rich skill base, north and south, that the border almost doesn't exist in the digital economy. And the potential for us to do so much more in collaboration, is pretty phenomenal. If you take that into, some other sectors like agri-tech or into manufacturing, what you find is that cross-border trade, it's not a zero-sum game. It's not that there's winners and losers in it. And as a matter of fact, I think one thing we see north and south is that there are very, very high levels of, I think what's called two-way trade. And it's largely coming from firms that are trading in both directions, in products or services in the same sector. That suggests potential for very strong supply chains. A different point I want to make, and now I put a kind of slightly different hat on. I happen to chair the implementation committee for the regional enterprise plan for the Northeast region, which is Cavan, Monaghan and Louth. And within that forum, we look to identify the potential to work with the relevant cross-border entities to capitalize on any opportunities that become presented, particularly through, for example, the Peace Plus program. And these aren't just, discussions in a committee. There's significant funding that can be accessed through the regional enterprise plan and has been accessed in previous iterations of the plan. There's a plan that we launched a couple of weeks ago. It's the plan to 2024. Across the Republic, there's new funding of 180 million being provided. And in the last plan, the Northeast region, those three counties, border counties, accessed 20.5 million of funding for some really significant transformational projects. And the great thing about our implementation committee is it's got a lot of key stakeholders. For example, InterTradeIreland sits there as a key stakeholder. In the previous plan, we developed a focused engineering cluster, which starts to work into these opportunities around supply chain, north and south of the border. So some really, really interesting things happening through that regional enterprise plan, and that have got a complete north-south dimension to them. Mark, I'll pause at that because I know we want to hear from Adrian.
Yes, thanks, Richard. If with time, I'd be interested in your contacts with Ukraine. In the meantime, as you say, Adrian is standing by with great branding behind him. Adrian, you deal in windows and doors. See what I'm going to do here. What are the key issues for you?
Well, the key issues for us, just to take you through our Brexit journey, it's been, quite difficult. 80% of our goods would ship to the UK. So we've found that process very difficult because obviously UK then was not in the EU customs union. So we had to learn how to do customs declarations. We had to take on board a lot of training. Trying to find information at the start was very difficult. It's probably the most difficult period in our 40-year trading history. We ended up having to form a UK company just to try and make the customs process easier, more straightforward. So even just to form the UK company was quite complex and involved quite a lot of time and effort. we decided, following discussions with our customs broker at the time, that we would have to make our own customs declarations, as they were unable to help. And that's really what we found throughout most of industry, that the knowledge just wasn't on the ground. There wasn't enough customs brokers, customs agents, people who really knew what it took to try and get your goods to ship from Ireland to the UK. And then all the processes that were involved in that. I mean, the registrations for all the different customs procedures that you needed to get involved with. We enrolled a couple of staff in Cllr customs courses. These were supports that were set up by CLT SkillNet at the time. But it became obvious that even the Cllr customs course was looking at Brexit from an EU ROI perspective, more so than the UK perspective. So for us to try and get our goods into the UK, we ended up having to more or less paddle our own canoe. You know, the supports just really weren't there from the Irish, being an Irish company. So since Brexit, yeah, things are looking a bit more positive for us from the point that we can now do our own customs declarations. We're moving goods back and forward to the UK, as well as rest of world goods now. We're looking after customs declarations for all of that. We've managed to automate our customs processes as well, so we can automatically lodge our customs declarations for both Irish exports and UK imports directly from our ERP system, which is fantastic. We've developed a dashboard to track our container shipments throughout the world and to log all customs declarations relating to them. And this process starts as soon as the bill of lading is issued, which is great. It means we've total transparency. We still have a lot more work to do, though, to improve our processes, as the goal is really to avoid paying double duties, which is the main negative effect of Brexit on supplying non-preferential goods into the UK market, because it's now seen as a third country. And then for future plans for the future, looking forward, the company would like to apply for AEO status, which is seen as the gold standard for customs compliance, as it sets out a framework of good practice to follow, and also to diversify our trade more and become less reliant on the UK, as we have now improved our supply chain to more easily cope with trading with other non-EU countries. And I'd just like to mention some of the funding and help that's out there for people, just in case they're not aware. InterTradeIreland has been very helpful, and they provided Brexit voucher funding, which we've availed of. We're also in the process of working with them on an innovation boost scheme, which is also to try and improve our supply chain to make the process for dealing with non-EU countries easier, more straightforward. CALT SkillNet, as I've mentioned as well, they've been very helpful with various courses, and then Enterprise Ireland as well, who provided funding for our customs funding. So yeah, that's really where we are at the moment.
Adrian, you stole my question. I was going to ask you for some advice of who to go to if you need some help. So that's very useful indeed. So thank you. A quick question for Anya, quick question for Richard before we go. Anya, did I hear you say that amid all the challenges that you're still very busy?
Yes, Mark's still very busy. I think, probably, the most pressing issue at the moment that businesses on both sides of the border are really facing post-COVID, post-Brexit, it's really the labour market, and it's attracting and retaining team members. The main thing that we're probably focusing on with organisations at the moment is the culture. And, when we think of culture, that really sets the tone for the organisation and, what way we like to work. So people have really changed, their attitude to work. They want more and more from the workplace. Flexibility and culture are so important now, and they really want that better work-life balance. So these issues apply regardless of what side of the border you operate on.
Okay, thanks, Anya. Richard, we're just going to pause that question about Ukraine because we've got a better question from Martin Casey. I don't know if you've seen it there in the Q&A. Do any of the panel see any potential changes in the rules and regulations to simplify them for cross-border employees working from home? A very up-to-date question. Do you see any changes that may help cross-border employees working from home?
I'm not sure I'm best qualified. Anya might be better qualified than me.
Anya, we'll go back to Anya if you want then. And you can take the next one. Have a look. Mark Maguire's asked a quick question, if you can handle that. Anya, what do you think about that?
So in terms of potential changes in the rules and regulations, I'm hoping that something comes down the line again. You know, this is very much left up to the government to really guide us on, and you know, it really would make life a lot easier for both the employers and the team members if something did come down the line. But again, I wish I had some type of magic answer to that, but at this moment I don't. You know.
Well handled. Well handled. Richard, can you answer the final question there?
Sure. Look, I think we can all be, you know, expecting and needing further guidance and support about implications from government. But I do think in general, you know, what's been provided as support and assistance has worked. There's, you know, the old saying, there's a lot done, more to be done. But I think in general, the various agencies, north and south, have responded to the challenge of trying to give people clarity, access to information. And in general, I think, you know, we're working our way through things probably as best could be expected in the circumstance.
Thank you, Richard. Thank you also to Adrian, and thank you to Anya. We now have another panel, a final panel of the day, and we're going to focus on opportunities. There's a good word for cross-border collaboration. And we have three people who know all about this, as they represent three organisations who collaborate on a daily basis. We're going to be joined by Aidan Brown, Head of Innovation and Business Development at DKIT. We're going to be joined by Brian Doran, Chief Executive of the Southern Regional College. Hi, Brian. And also Philip Maguire, Director of Finance and Administration at Catalyst. Who will we start with? Aidan, we will start with you. You've worked with a lot of businesses on both sides of the border who started out small and are now global. Tell us a little bit about your department's role in supporting those types of business. Good afternoon to you.
Good afternoon, Mark, and thanks very much for the opportunity to be here today. I suppose DKIT, we've significantly recognised research, teaching and learning capacity here that is very much underpinned by an entrepreneurial mindset. And that strong track record of engagement is, from a community and an industry perspective, is very much due to the efforts of the committed staff here. Richard Hanlon mentioned, you know, the Northeast Enterprise Action Plan, and we're cognizant that we're part of a regional and cross-border economic ecosystem, and that very much works best when those partnerships are open and collaborative, but moreover organised around very much win-win principles. And I've been accelerating those efforts to try and encourage more collaborations and very much occupying that proactive role in that regional development process. But if we take it back a little bit in terms of industry engagement and from industry's perspective and where the opportunity lies, I think we'll all agree, and Anya mentioned retention and recruitment as a key challenge for companies. Great employees are a cornerstone of all organisations, not just industry, including our own, and it is a challenging market to be in. And fundamentally, there is a real win-win for industry and institutions like ours to engage on this and to collaborate. From a fundamental level, we engage industry to collaborate on curriculum development, making sure that our curriculum is fit for purpose, that our graduates are coming out with the right set of skills. But there's also opportunities to engage with internships and student placements and student projects, and the development of graduate programs, which are hugely important for industry and hugely important for students. And for the students, those collaborations give that real world experience, while industry get very much to de-risk a little bit in terms of road testing a prospective future employee. And it really is a more holistic interview process for them when they engage in that. And as action-oriented engagements for the student, what we're doing is we're very much creating employability skills for those students. So very much a win-win-win, if there is such a thing. For current employees with industry, we engage quite a bit, particularly through our Lifelong Learning Centre. and we can help industry with upskilling. We talked about, Richard Hannon mentioned about, digitization. We're moving and developing through our part-time programs, a lot of technical specialist programs, but also management development programs. And COVID has forced a lot of us online. We've moved a lot of our courses to being flexible, from fully online to hybrid models to back face-to-face. Some courses only really facilitate face-to-face, but we're doing them from right from the floor, from operations right up to senior management. And we're also facilitating those bespoke to companies where we're going out into organizations and having a delivery mode on site with these organizations. So that's very much, we can support finding the right employee. But there's other sides of it beyond the kind of human capital development. And that's where there's significant opportunities on the research, innovation and entrepreneur development side of things. And we can engage industry, north and south, with a range of disciplines housed at DKT across applied research and innovation projects, enterprise support programs, direct consultancy, and we can also help on a case-by-case basis help companies to source funding. And I would like to maybe take a particular emphasis on what we're doing in the energy space, which is very current. Thomas McEvoy mentioned the whole green agenda. We've just launched the Credit Technology Gateway, and that can provide a range of applied research and innovative solutions to industry across energy optimization, energy storage, and renewables. It's the initiative is quite relatively new, but we've put significant investment in it, and we have state-of-the-art equipment and expertise in large-scale capital equipment test beds that we can actually help industry with close-to-market product innovations and testing. And another real growth area is the collaboration opportunities in the connected health and wellbeing side. This is a huge growth and all-island opportunity. We've invested significantly in this, and we've broad collaboration, including, I know Joan Martin is set to close the event today, and the team at Louth County Council have been particularly rowed in behind this opportunity. And we're looking to develop the entrepreneur research and innovation support activities around the DConnect project, which is also delivering close to market solutions for industry, but we're also investing in an extension to the Regional Development Centre on campus. And that will provide agile workspace and a supportive environment for companies to grow and scale in this area. And it's a very much an all-island approach that we're doing. We're building on quite a bit of historical experience in research and innovation that we have in this, and very much building to try and cluster industry around this opportunity. So I suppose, Mark, that's just a few key areas where we're mobilizing DKT and trying to do this in a more holistic way to build long-term relationships locally, regionally, and on a cross-border basis.
Very helpful. Thanks, Aidan. And I love that expression, win-win-win. In Dundalk, you get a win-win-win, not just a win-win. Right, Brian Doran from the Southern Regional College. You've got a business support and innovation unit. Tell us more a bit about that and everything else you're doing. Brian.
Thanks very much, Mark. I'm delighted to be here and to share with representatives here the work that the college is doing through its business support and innovation unit. That is a unit that is established within the college as a dedicated team of industry technology specialists. We also have a team of business development executives who are going out literally day by day working with local companies. We support companies of all sizes, but our particular focus is on microbusiness and SME. And I suppose to describe the work, it falls into really three main pillars of support. The first is similar to what Aidan's referring to there, is the innovation and knowledge transfer. Our focus is about trying to support local companies to innovate and to grow, increase levels of productivity. And we do that through that team of technology specialists. And they exist. We're growing that all the time. They're a range of expertise ranging from digital marketing, engineering, product design, advanced engineering, food technology is increasingly important. And what we are trying to do is to use the existing support mechanisms from, for example, the Department for the Economy here in Northern Ireland has a number of projects that colleges in Northern Ireland are funded to deliver. And Innovatus is one. We also tap into KTP, knowledge transfer, fusion projects, etc., co-innovate supported through InterTradeIreland. But what we're trying to do is to encourage companies to get on that innovation escalator. And we, in effect, supporting those companies, we hide the wiring. I often describe it as hide the wiring of the bureaucracy that sits behind a lot of the funding. So our team of business executive and technology specialists are very much working with those companies on a range of different initiatives, short term, longer term. The second strand is really focusing on upskilling and workforce development. And we've heard a lot about that today, the need to support workforce development. And again, we're using a variety of different sources of funding. The skills focus is a economy department initiative, again at upskilling existing employees. There's a 75% contribution to taking any employee through training programs from level 2, what we refer to as a level 2 or a GCSE level here in Northern Ireland, upwards through to higher level and degree level provision. In addition to that, that initiative is also open to companies based south of the border. And more recently, as part of the economy's recovery planning, they've introduced a skill up program that companies no doubt will see advertised. And these programs are free and that will continue over the next year as well. So we would encourage companies north, south to talk to us about those opportunities. And the last strand of work, Mark, is the development work that we do to support companies in their own workforce development, particularly in the apprenticeship space. An increasingly important strand of work for us. The Department for the Economy's apprenticeship strategy launched back in 2015. One of the key aspects of that was the development of higher level apprenticeships or degree apprenticeships. And that grows from strength to strength year by year. We are developing those in conjunction with business and industry. Apprenticeships in Northern Ireland are very much employer-led, and we are working with a range of companies on the ground to develop an understanding of what those needs are, and that has led to the development of new apprenticeships. And this year, for example, we had over 240 new higher level apprenticeships. Together with, we would recruit typically up to 1,000 level 2 and level 3. And I think from companies' point of view, addressing the future workforce needs, companies seriously need to look at the talent acquisition that can be obtained through apprenticeship routes. I'll pause at that, Mark. Thank you.
Brian, those are good numbers. Those are good numbers. Really appreciate you sharing those numbers with us. Finally, Philip Maguire. Philip, what are Catalyst up to and what other funding opportunities are out there? Good afternoon to you.
Good afternoon, Mark. Good afternoon, everybody. I'll talk a wee bit about Catalyst first and then just give you an overview of what we try to do both locally and then on a cross-border basis. You know, we are a science and technology hub, and not just physically though, but in all the activities we do. And we were created as an initiative under the Good Friday Agreement. We're also a company limited by guarantee. So in effect, we've no shareholders, so nobody benefits from the work we do other than those we try to help. And also, you know, our money then, all the money we use is applied back into doing what we do. And our mission really is to make it easier for you to innovate. That's really what we want to try and do for everybody, no matter who you are, whether you're a Institute of Technology student or whatever, or whether you're a person in a company, we want to make it easy for you to innovate. And our role in that really is in our name. And I'll come to that in a second. So we don't necessarily provide finance for innovation-driven enterprises. We don't go out and give money, give grants. That's not what we're about. And also, I mean, I think as you know, probably Aidan will also agree, it's not necessarily the biggest problem that faces innovation-driven enterprises. Money isn't their biggest challenge. There are lots of other challenges they have long before they ever need to get thinking about money. And that really derives in our mission, the three pillars of what we do. The first one really is providing future workspace. The second two really are where we are more focused on providing cross-border collaborations, and those are about entrepreneurship and scaling programs and activities and supporting open innovation and clustering. And those are the two things that we focus on in the activities we do. okay, in the future workspace, we are looking at how we can expand our influence outside of just Northern Ireland. We've done a wee bit of that on an Interreg project in the Northwest, and we are now looking at how we can do further initiatives in the Northwest. We are in a joint venture with Donegal County Council about creating workspace in the Northwest as well. We haven't yet looked at this corridor to look at that. Under the entrepreneurship and scaling, we run a suite of programs to support early stage companies with growth and scaling ambitions. And that's focused on creating the atmosphere to stimulate the idea, helping to incubate and develop the products for those companies, and then supporting the companies and businesses to scale. And just as an example, in creating the atmosphere to stimulate ideas, we run a program called Catalyst Schools, and I'm not sure whether Eamon is still on the call, but Eamon, you were kind enough to host at DELI Lights a cohort of that yesterday, and it's about bringing together school leaders and business leaders to understand each other's problems, and really is to support each of those cohorts. And thanks, Eamon, for facilitating that for us yesterday. In funding opportunities for IDEs, we don't see in our region, the challenge is really for businesses looking for between 500,000 and 5 million. And I'm not including the southern part of Ireland in this. This is in the northern part and the border regions of Ireland. You know, those are the challenges that face those companies. Anything up to 500,000 is your family and friends. Anything over 5 million, you can probably go and look for it somewhere else. So we want to run a program that links together the VCs and family offices from outside of the region, whether it's London, whether it's the US, whether it's in Dublin as well, with the companies and businesses that are looking for that type of money. So saves the business going and spending 6 months walking the streets of London or whatever to find who's going to fund their business. Open innovation is probably another area that we are focused quite heavily on at the moment. And that's really about how do we create an environment for clusters to develop. And clusters are not just about saying there's X number of thousand people employed in the sector. So it's really an opportunity for cross-border collaboration across all the elements of the triple helix: academia, business, and government. I think, you know, we touched on that a wee bit as well. So, for example, we run a €9 million advanced manufacturing Interreg funded project, and that links together real problems that businesses have with the academic institute that can help them solve those problems. And the academic institute gets a PhD researcher out of it, and the business gets real support for a real life problem that they have. And it's working well across the whole of the region as well under that Interreg funded program. Richard touched on the fintech sector, you know, but how do we, I suppose the question is, how do we take and develop a cluster around, say, a regulatory technology? You know, fintech is too broad, really. We need, how do we specialize as a region, whether it's this corridor, whether it's the Northwest region? There are, you know, everybody says they're brilliant at fintech, let's be honest about it. So we need to look at how do we create something that's unique in our region that can build around, say, something like a regulatory technology and build on that. Again, just when we talk a wee bit about Brexit, most of the businesses involved in the knowledge economy are not limited by borders. They're not limited and constrained by Brexit really either. You know, so they are trading and continue to trade worldwide. And that's what we want to try and get those companies to have global ambitions that are much more than just about trading in Ireland or trading in the UK or trading even in Europe. It's how do we give those businesses the global ambition to be world leading innovation driven enterprises. Although I will pick up on Anya's point, you know, there is cross-border challenges that arise, and I know for the Northwest in particular as well, there are some issues there that employees living in Ireland have difficulty then working in Northern Ireland, and I think the tax issues need to be sorted out to sort that out. Mark, that was really all I was just trying to say. So back to you, if any, and I'm happy to, again, if there's any questions, we can pick up on those as well now.
Philip, I think you've covered everything, as has Aidan and Brian. If anybody does have a question, please put your name and your email address into the Q&A section and we will get back to you. But in the meantime, thanks to Aidan, thanks to Philip, thanks to Brian. And we now move on to our final session of this conference. As we know, we promised we would finish at 12:45. We're on schedule. We've now reached the final section and it focuses on the role our two great local authorities play in the economic development of this gateway region. Let's hear more about exactly what they're up to. We're going to hear from Joe Martin, Chief Executive of Louth County Council, and also Conor Mallon, Director of Enterprise, Regeneration and Tourism at Newry, Mourne and Down District Council. Conor, you're going to kick off. Over to you.
Yeah, thanks, Mark, and thanks to both Newry and the Dock Chambers for the opportunity to take part in the conference today and talk to you about the partnership working between Newry, Mourne and Down and Louth County Council. Excuse me. Today I hope to focus on the evolution of the partnership between Newry, Mourne and Down and Louth Council from its formation until the present day. And I hope to outline some of the partnership's achievements to date. And then Joan will discuss our ambitions and objectives going forward. Some background: the formal partnership between the then Newry and Mourne Council and Louth County Council was established through an MOU that was first launched in Brussels in March 2011. At that time, it was acknowledged as an extremely innovative approach to cross-border cooperation. And the EU head of territorial and transnational cooperation at the time commented that it was a first in Europe and that the supporting strategies for smart, sustainable and inclusive growth was unique in Europe, and he intended to showcase this as a model to other regions in Europe. So you could say we got off to a very positive and a very good start. In 2015, the partnership was subject to a review in response to the reform of public administration in Northern Ireland and the review of local government in the Republic of Ireland. Following the review, it was recommended by both councils that the East Border region should be engaged to facilitate and support the strategic alliance between the two councils as part of their role as the cross-border organisation that represents the local authorities. This resulted in further development of the partnership and the establishment of a robust governance structure that included a joint committee of elected members, representative of all political parties, who meet 6 times per year to agree the strategic direction of the alliance and the partnership. It also includes a joint senior management group made up of council chief executives and directors. We also meet 6 times per year to deliver on the action plans, objectives and the strategies identified by the joint committee. We also have an advisory forum that's made up of key stakeholders and interested bodies and a secretariat that has been facilitated by the East Border Region team. In 2016, the pending exit from the EU following the Brexit vote raised a very real challenge to the border region. In response, both parties agreed there was a need to review the action plan and refocus our strategic objectives. This was completed in 2017 and resulted in an updated and refreshed action plan that outlined some realistic and time-bound activities which could be delivered by councils under the auspices of the Memorandum of Understanding. The action plan at that time focused on 4 key themes. The first one was climate change and the environment. Second was tourism. The third one was lobbying and promoting the region. And the fourth one was economic development. The objectives of the partnership continued to be reviewed on a biannual basis. And the 4 themes that I've just referred to are still very relevant even today. So following on from the UK leaving the EU and the introduction of the protocol, there still remains an opportunity to showcase this partnership as an example of best practice on a cross-border basis. The MOU is still a key mechanism to present worthy projects and proposals that support economic development, tourism, and the development of our communities in both council areas. We also feel the success of our partnership places the region in a strong position to be successful in securing significant funding for cross-border projects and has a key role in lobbying on behalf of both councils at a central government level in both jurisdictions and in Europe. As a cross-border councils, we have been involved in the delivery of a number of successful programs and projects across a range of sectors over the years. And to close, I'll go through some examples of the cross-border projects and programs delivered or currently being advanced. We continue to work in partnership in the Carlingford Greenway and the Narrow Water Bridge capital projects, which will benefit both areas from a tourism economic development and active travel perspective. We continue to work together to develop proposals to tackle erosion along our coastlines. The Innovate Accelerate programme has enabled cross-border partnership development, business growth and information sharing from businesses. We have developed and realised joint tourism, economic development and environmental promotional videos for both districts, and we continue to work to tackle illegal dumping and fly tipping. The Swim Bathing Water Quality Project enables us to provide up-to-date information to the public on water quality at our local beaches. The cross-border intercultural programmes have promoted integration of our ethnic minorities. The youth engagement programmes have targeted personal and communal capacity building and have incorporated a vision for a shared and peaceful society. The Youth Arts Peace Building Programme has promoted the development of young people's awareness of conflict and cultural diversity through the medium of arts. And we have engaged recently in cross-border litter picking events with our primary schools in Louth and Jonesborough. And we are currently developing proposals for joint tree planting programmes in partnership with our local communities in both districts. So I hope you find that that's some of the key work that has been undertaken as a partnership. I hope it gives you a flavour of what's been achieved to date and that you've found these of interest. So thank you for listening. And at this stage, I'll pass you back to Mark. So thank you.
Thanks, Conor. Interesting to hear about the uptake in the bathing water testing. I'm going for a swim in the Irish Sea this afternoon at 3 o'clock. If anyone wants to join me, I'll be down in Bangor. Joan, that applies to you as well. But in the meantime, tell us what you've been up to.
I'll definitely pass on the swim. That's for sure. Anyway, Mark, at any time of the year, definitely not on an afternoon when the temperatures are down at kind of 3 or 4 degrees. You're very welcome to it. I must say before I start how once again, not for the first time, how impressed I am and how happy I am that I'm looking at a range of individuals and organizations and companies that are so committed and dedicated and innovative and all the other words you can think of, who are doing so much for this region, not just to combat problems, but to put this region in such a great place to capitalize on our opportunities in the years ahead. And the people of the region don't know about it maybe half the time, but we're really lucky in this region to have such wonderful people working on behalf of its economy and its people. I suppose to follow on what Conor said, our actual alliance relationship is relatively young, you know, it's 10, 15 years old, but as councils, particularly around Louth and Newry, the old Newry Town Council, we've been working together since the mid-70s. So we're talking about 50 years of cross-border cooperation. And of course, we have other alliances, East Border Region, along the border corridor, and now more recently, our two councils are at the heart of the Dublin-Belfast Corridor Initiative that stretches all the way from Belfast City Council down to Dublin City Council, the 8 councils working together. So there's so much work going on. And while a lot of what we might talk about might sound as if it's quite local and small scale in our own area for our own people, the themes are the themes people have been talking about all morning. So Conor's been talking about what we have been doing and are currently doing. But before Christmas there in November, we ran a series of facilitated workshops for our councillor members and the management teams of the two councils to look at our strategy and our direction for the year ahead. So we came up with a number of themes, our key action areas, 5 of them. There'll be nothing that won't sound familiar. We're talking again about regenerating the economy, social development. We're talking yet again, and will be forever, I think, about climate action and the environment, about infrastructure and digital connectivity, and about health, well-being and education. So all the themes we've been hearing about all morning. And under those themes, we have a whole series of priority goals and some goals that might be a little bit more aspirational, but are the things that we feel are what's needed to continue the development of our district and our region and the whole corridor, and to keep driving the economies of our counties and of the greater region and indeed the island. So the kinds of goals that we have, say, under the regeneration economy are around supporting the development of digitally connected communities, both urban and rural, about community engagement and rural social inclusion through the network of council facilities. So using our facilities to help increase digital connectivity. About a collaborative tourism initiative in Carlingford to build on the video that we've already done that Conor mentioned. And indeed, we have an aspiration to blow away the border yet again and to get Ireland's ancient east to overlap the border area and take in particularly the whole of Carlingford both sides of it. On areas like digital connectivity, we also want, maybe I'm looking on, what did I say now? We're also very interested in acting as a pilot in this area for trialling hydrogen fueled transport. So looking at climate action, we've already been working as councils and will continue to work on a fleet strategy for our own fleet in the region to try and transition to low carbon, particularly our bigger vehicles that can't go electric. So we're looking at that, and we're looking at hydrogen. We're continuing to be concerned, as Conor talked about, cross-border illicit dumping and the whole legislative quagmire that stops us tackling that in a real way, whether it's the fact that it's cross-border, whether it's issued around GDPR, data protection and the use of video cameras and using them on into court proceedings. We want to look at areas like park and ride. Louth County Council were lucky enough to recently get a new park and ride facility, but we need more of those. We need to encourage community pooling of transport, and we need to look at what we can do to increase public transport options for our people in the whole climate change and active travel and modal shift and all of those areas. On health and well-being as well, we're interested in looking at our local libraries, who certainly in Louth were very active during COVID on health and well-being and about educating the public and giving them access to all kinds of documentation and workshops and online videos and so on. So we hope to do that on areas, not just on well-being, but also wider areas like climate adaptation and sustainable energy. We're looking at our councillors are very anxious about drugs and the influence of drugs on our towns and our villages and our families and individuals all across our region and indeed all across the island. So we're looking at the feasibility of a cross-border task force for drugs misuse. So this is something that we want to look at in the years ahead. So we're working, I suppose, at a local level for our people, but the work that we're doing fits well into all of the work and all of the areas people have been talking about all morning. It's without intending to or without deliberately chasing the money, the types of things that we're looking to do are the types of things that programs like Peace Plus, the Shared Island Initiative and so on, they're the same things that they're interested in. And as I said, we then are moving out across the corridor to work with the councils there on research and moving into branding and promotion of the region. And again, the kinds of priorities there are around skills, building on existing sectoral strengths, growing clusters and so on to increase foreign direct investment. So it's common themes. I noticed one of the questions there, Mark, I couldn't resist. Somebody's asking what are the councils doing about the impact of Brexit. We've been at it from the start. I'll hold up this little document here, which is a Brexit corridor report that was produced by the councils along north and south of the entire border from Louth and Newry up to Donegal, Derry. That was produced in 2017. So we were in there on Brexit, addressing and identifying the challenges, lobbying at a national level. And if I point to Thomas McEvoy, Thomas and his Leo and all the work they've been doing, they're at the heart of my economic development unit. So the councils are there and will continue to be there to support our businesses, particularly our smaller businesses that need more support, that can't have every skill and need our support, and we're there to do it. So thanks for the opportunity, and back to you, Mark.
Thanks, Joan. Thanks to you. Thanks to Conor as well. Thanks for your support for today's event and also for your kind remarks. Finally, Today could not end without hearing from the two chambers who made today possible. We're going to hear from Newry in a second, but first, Paddy Malone from Dundalk. Over to you, Paddy.
My apologies, Mark.
We've got you now, Paddy. It wouldn't be the same without you. Over to you.
Indeed, Mark. Okay, listen, folks, thanks very much for attending the conference. Been, as usual, stimulating in in many ways. I just want to make a few points from the Chamber's point of view. First of all, Frank Pentoney is retiring from Louth County Council, and maybe wish him Godspeed and enjoy his retirement, and not see too many wins for Deirdre. That Dundalk would still be on top of them. But anyway, picking up on what we actually talked about, the 2040 development plan in the south earmarked Deirdre, Dundalk, Newry, the M1 corridor, which the Chambers was significant in their lobbying right back as far as 2010. So it was a great win for the three Chambers. It complements rather than competes with the Belfast-Dublin economic corridor that Joan and others made reference to. It actually highlights the need for a central core. And I think that's an important one to understand. It also picks up on the whole theme that was introduced a year and a half ago by the Taoiseach, Micheál Martin, in relation to the shared island. So it all complements and comes together. And we, in this area, need to drive that together. There was a couple of questions in relation to the taxation of cross-border workers. As an accountant, I've been raising this issue and through the Chamber for the last 5 years. We've got some answers, but not enough to actually say we got an answer. It was interesting to see that the Revenue last week issued a statement saying that the temporary procedure will continue to March 2022. It's of some benefit, but not a lot. This is not just a north-south problem. It's got to do with any border within the EU. So it could just as easily be Luxembourg and France or Belgium or Holland or anywhere. Finally, I'd just like to, just two other points. The DKIT is an institute of higher education, which is there to support the whole region. And I'm glad to see Aidan Brown was here today. We would, as a chair of DKIT, I really would encourage businesses north and south to tap into the potential of that. Come and ask us. Even if we can't do anything for you, at least you tried. Finally, we are running a cross-border tourism conference on the 6th of April. So all are welcomed. And again, it will be done by online. It's probably the last one we're going to do online, but just it's something that we've been doing for, I think, about 14 years on a cross-border basis. So if anyone is particularly interested in the cross-border economy, on the cross-border tourism potential for the region, be it big or be it a bed and breakfast or be it client of mine's renting out bikes, it doesn't matter what it is, you're very welcome. So can I just say thank you, Mark. Thanks to Newry Chamber. We have collaborated as we usually do. We compete in very many ways, but at the end of the day, we pull together for this region, and that's the most important thing.
Well said, Paddy. Let's cross the border now to Newry and the president of the Newry Chamber, Julie Gibbons, who is, of course, also the managing director of Abbey Autoline. Julie, I haven't seen you since you've been installed as president. Congratulations. Over to you.
Thanks, Mark. Yeah, thanks, Paddy. I'd like to echo your comments. Newry Chamber has a long history of working with Dundalk Chamber, and in particular through events like today's cross-border trade conference. We are, I feel, entering an age where collaboration is even more important, where specialists can come together to deliver certain aspects of projects and duplication is reduced. I know my chamber team of Tony, Jessica and Charlotte have been working with Paddy and Brenda in the Dundalk Chamber since last September on this event. And since Christmas, they have held weekly Zoom meetings to ensure that this conference was delivered in the most professional way. So thank you so much to all of you who have organised it. I think we can all agree it was a job well done. We are thankful for the support of the principal sponsors, InterTradeIreland, Newry, Mourne, Down District and Louth County Councils. Their teams have played a very active role in recruiting speakers to the conference. As a chamber, we want to connect our almost 300 members with a range of stakeholders and with other businesses north and south of the border. We want to help share best practice and encourage our members to collaborate with each other again across the border. Many members are outward looking, ambitious for growth and looking towards export markets like the Republic of Ireland. I hope that you benefited from today's event. We would encourage you to continue to reach out for help from the agencies who presented today. The Chamber teams are always on the end of the phone, so please contact us. We have much hope and expect that this event will be back to being in person again in 2023. Thank you again and have a great day.
Thank you, Julian. Hear to that. Hopefully this time next year we'll be about to go for a lovely lunch somewhere.
Yeah.
We'll be able to shake hands and we'll be able to actually properly network. But as Julie said, it has been good. We've had more than 200 people in this virtual conference and more than 20 people participating. Thanks again to every one of you who took time out this morning. And as you know, it doesn't stop here. There are lots of contacts in the email that you received where you can actually ask direct questions. Thanks finally again to our sponsors. Thank you for your patience with me. Thank you to Sarah at Planned, who amazingly brought us all together here with very few hitches. It wouldn't be the same without the odd hitch. That's one thing that we might miss. But in saying that, I really do hope and pray that we're all together in person next year. I'm off into the Irish Sea. Thank you for your company. Have a great day. But for now, it's goodbye.